Hello and welcome to the Friday wrap up. I am your host, Landy, and this evening's live stream is brought to you by David Gockstein. And it is Friday, the 12th of June. We had a big IPO launch today. I think everybody knows what that is with SpaceX. But we are going to start today not looking at SpaceX. We're going to take a look at Bitcoin price action here on a stalled feed from Coinbase. Isn't that great? Don't you love when the data doesn't come in right when you need to actually go live for a live stream? But yes, for anybody out there, I do have some special guests that are going to be coming on here in just a moment. I did want to get my thoughts on price action out of the way before I bring them on and we start moving on to either looking at Bitcoin or other items and having a discussion about price action and markets in general. But if you can, if you are in the audience, please go ahead and like and share this live stream out there. This is live. I am looking at the chat. And I've got a few folks in the background here in the green room. So let's actually take a look at Bitcoin on the daily here. Pretty simple. We have higher low structure on Bitcoin right now. So what are the conditions that need to be met in order for this to continue to bounce? Well, in this case, we need to see the last lower high break. And that, of course, would be above 64, 234. You can call it 64, 200 to 250, depending on your chart here. We do have a trend reversal set up with a higher low in place. We just need to see the trend break above this 64, 2 to 250 area. And then we can start looking for further upside. In fact, mean reversion back to the basis, not out of the question, especially above $65,000 to around $68,000 to $70,000. So everybody that watches my analysis on a regular basis, you already know my levels, but let's go ahead and show this for anybody that might be new. We've got some daily and weekly levels and a whole bunch of mess of lines here. I ate the crayons after I drew all these lines, but you can see that we do have some confluences coming into play here. So we have Bitcoin entering the low side of the structure over here. We had the initial bounce, of course, off 60K. We had a lower high put in. We had a little bit of a downtrend. We set a pretty good low over here on volume between the wicks here, between 65 and 62.5. I have the downside zone where we saw the most recent bounce before a nice run to the monthly 82.5 to $83,000. So if I'm going to be looking any further up, I need to see breaks and closes above $65,000. Obviously, in lower term timeframes, if we do see a break above $65,000, I want to see follow through with a daily close. If we haven't already tried to run up to the next big area, this purple zone between $68,000 and $69,000 or thereabouts on spot. It is a little bit higher than that, but that is, of course, where the basis is coming in as well. This is also the trend break from the last time that Bitcoin bounced off $65,000, put in a higher low, swung above to break the swing trend, and then close through to actually go up and test another big area, top side of the range here for me. Before getting into some shorter term resistance overhead if it did it. But that top side, of course, would be this 70 to 72, or in this case, 70,500 on the low side to 72.2 on the top side there. So what am I looking for? We have a trend reversal set up on the daily in play here. Now, what I would like to see is a close above 64, 200 to 250. In this case, on spot, a close above 64, 234.45, and then take out 65K. And then we can start looking for further upside. But if we do start to see things trade back below the lows here at 62.5, and especially closing back below the lower first standard deviation of the Bollinger Band set here, I'd be looking, and that's going to be around, we're going to call it 62, because if this does come back down towards there, it will stretch out midday or intra candle, and it's going to keep heading down. So we'll just call it $62,000. I'd look for a retest of this low anywhere around that 61.5 to the low here at 60,700. Of course, if that area is dropped, it'd be dropping not just the swing low, but the closes over here. We'd be looking right back to 58 to 60. Everyone already knows what I'm looking for below there. If you've seen any of my analysis, and or if you have looked or heard me on Spaces and looked at any of my charts, you'd notice this big zone down here below 58 to 60, which of course is a monthly to that front run of it at 60K. We have the lower second standard deviation starting to come into that area that I spoke about the other day at $56,000. This entire area down here between 52.5 to around $56,000 is stacked weeklies. I would be looking in this area, top side first, 54 to 56, then down to 53 and a half to 52. So anywhere below there, of course, we'd be looking for lower. I'm not actually looking for that right now. That's actually not my first take on where price is headed, but if it does test back down, we had the expansion, a retest of that lower second would not be out of the question. I wouldn't be looking for re-expansion down. Bands are pretty volatile and spread wide here, but right into an area of interest to the downside. So I'd be looking at that as probably getting a buyback right back into the 58 to 60 level if that did occur. So got a higher low in place, need to see the lower high break, close above 65 in medium term timeframes below the daily, your 4 and 6 hours. That's probably going to start indicating that going into a close of day. If we haven't already headed up in an aggressive fashion, I would be looking for price to work its way up towards 68 to 70 initially, which would encompass this zone at the purple area here by the basis to the bottom side of this overhead resistance, right where we bounced from before breaking down. And then if we did see 70, 68 to 70 reclaimed in any kind of strength with any kind of strength in that area, we could start looking towards that 72, 72, 2, and possibly more. Otherwise, watch those lows, 58 to 60. If we drop it, we're headed down to mid 50s to low 50s. All right. I don't want to make my guests wait too much longer here. They can always ask me about what it is that I'm looking at, but I'm more interested in what they are looking at, whether it be price action with Bitcoin, traditional markets, really doesn't matter to me. I've got some brilliant people with me today. The three folks that I have with me today, I've got one Bits of Wealth, who is a wonderful, wonderful, wonderful person, just a gem of a human being who totally doesn't troll me on a consistent basis and get a kick out of it. But got Bits of Wealth with me back there. Going to bring him on in a second. Of course, everybody knows him from Wolf Bitcoin and from his live streams on Wolf Bitcoin, part of the Wolf Network over there. Absolutely love them. Big shout out to Cade and Wolf Bitcoin. And of course, I'm going to bring Bits in here in a second. I've also got one Ryan Ladd, who you can often find on Wolf Bitcoin and all things crypto if you are in the spaces. And then, of course, the one, the only, the dev extraordinaire, Ash, which I'm really excited about. So I'm really happy to have them here. Hopefully, Bits is here in the studio. We'll see if he is, if I bring his profile in. But I'm going to bring all three of them in, and we're going to see how this goes. So yeah, I think Bits might be having some connection issues, but I've got Ryan and Ash with me. We're going to go ahead and see if I can't multi-screen this in a better way. Can we spotlight this? How are we going to do this? Let's contain. We're going to go to containment mode. Looks like Ryan might also be having some connection issues here, but he might be coming back in. So for the time being, I'm going to say hello to Ash. How are you, Ash? It's good to see you.
G'day, mate. How are ya?
I am doing great. I'm loving this price action, hitting all of my targets. I'm, of course, with Bitcoin. The news today has been absolutely consumed. So I see Bits is trying to come back in. I see Ryan is trying to come back in. Let's see if we can't get them in here. I've got doubles of you and
Yo.
yo, what's up, Bits?
All right. Yeah, it was glitching, and I guess the last time I left and came back, it like stayed glitched. I don't know.
Yeah, I think that might be happening to Ryan right now because he
Yeah.
is not able to
I had to hit leave. I couldn't just. I closed out the tab the first time, and then I came back, and it looked like that messed it up. So I had to hit the leave button. I'll tell him here in a minute that I had to leave and then come back and give permission all over again for Cam and
interesting.
Yeah,
Mike.
I'm starting to feel like the
There you
battering
go.
ram here. I just keep getting
Wow.
kicked.
Oof.
Oh,
Yeah, that was
mid-sentence.
rough. That was rough. That's not fun. Hopefully we can
Yeah.
get Ryan back in here. Yeah, because I see Ryan like 4 different times in here, and I think it's even that way on the stream. Let me look out on the stream. No, it's just showing an empty placeholder box for me in the background here.
Yeah.
So, yeah, I mean, today everything was the entirety of the timeline, all of the spaces, all of the streams, everything was consumed by, of course, SpaceX. And you know, not a lot of people really paying too close of attention outside of us to Bitcoin. Um, so I'm curious, like, I'd like to start with, I was just kind of introing with Ash. What have you been looking at? Have you had a chance to look at anything today outside of like the normal stuff, your Bitcoin or any kind of your top tickers, or what were you looking at today?
Yeah, look, pretty much Bitcoin, man. Like to your point, I expected the timeline to be chock a block full of SpaceX IPO pieces and every space talking back to that. So there wasn't a whole lot more I needed to sort of know about the timeline today. So I was purely focusing on BTC price action, which is generally what I tend to do for the most part anyway.
Yeah.
Yeah.
Bits, how about you? I know you've been on the charts. You probably streamed today too, didn't you?
I can't remember. I genuinely don't know. I don't know if I did or not. My life's a
It has
blur
been that
right
kind of week,
now.
hasn't it,
It's
Bits?
yeah.
Did you go to bed or have you just roll on through?
No, I went to bed. Yeah, I went to bed, but I'm not sure. I don't think I have streamed today. No. I did FOMO Friday. I did FOMO Friday today.
Okay, so yeah, you were at least on a stream today.
Yes. I was like, I think I was, but I'm not sure.
Oh man. Yeah. So for those there might be a few people that don't know, FOMO Friday is Lady Trader stream that she runs just about every Friday. And a lot of you guys are on there, right? I believe yourself, Bad Price, and even Ash, right? You're typically on there every once in a while.
It's too early for me, man. Like it's really hard to crack open the charts at like 2:30 in the morning for me. I can't hold a candle to our lovely Lisa, so alas, I don't show up to the FOMO Friday.
Yeah.
All right, that's funny.
But we've had Nat on there though. Nat's been on there. I think we've had William. William wasn't on today, but he's typically on there, and then Bad Price. Yeah.
Nice. Well, I'm sure that a lot of the stuff that you cover there probably going to cover here. I'll kind of open it to you because I know Ryan is not here for charts, but he is the quant. He's the quant of quants, and he's got a lot of things that he's been looking at. And I figured, hey, Ryan, why don't you come on here, even if you're not comfortable yet showing your charts? He can throw out a few things when we round around to him that maybe we can take a look at for him. I know that I like to open up brand new charts and just start charting them. I used to take requests. I know Bits, you do the same quite often. You'll just kind of look at the chat and take requests.
Yeah.
But Bits, do you want to go or do you want to have
Sure.
Ash go?
No.
Go ahead, Bits.
I don't mind. Yeah.
Yeah, let's go ahead and share your screens. And you can always share your screen ahead of time as well, Ash, if you want. And I can just turn it on and off here. Like I'm going to bring up, I'm going to end my share here. Yeah, there we go. And we'll bring in Bits and we're going to spotlight it. So this is going to bring our profiles away, but we're all still here on the stage.
Okay, cool. Oh yeah.
Before Bit starts talking about his charts, he needs to define whether or not it's inverted or regular. Please.
Well, at a certain point, I would like you to know what kind of chart it is. See, we're going to start testing you, Ryan, as Bits, myself, and Ash. What we're going to do is we're just going to start randomly inverting charts and then sending them to you and seeing if you can identify them.
I will tell you, it's the greatest lesson I've ever learned so far in my charting journey. So thank you, Bits.
You're welcome.
That's funny.
It was a good moment. That was a good moment in the DMs. But yeah, look, I like inverting them because it helps break like the bias and the automatic programming that your brain does to like paint a reality that is friendly to you. It's the same reason, like here's an example. It's the same reason that you don't notice certain vehicles until you're looking for those vehicles or paying attention to those vehicles because you're either shopping or a friend bought one or something, and then suddenly you're like, man, everyone has one of these, right? But you never noticed before. So our brain does some interesting stuff, in terms of filtering out what it believes subconsciously, what your brain believes is either irrelevant or not in your benefit. And sometimes it chooses to protect your emotional state rather than what it should, which is your actual well being in showing you the truth. But and it happens in trading. You sometimes you just look at stuff as well, and your eyes just kind of fill in the blind spots a little bit. So it's an interesting exercise, and a quick little flip does wonders for like just resetting that, and you're suddenly kind of like, maybe that doesn't look as good as I thought it did when I'm looking at it from this other angle. So it's good trip, good trick that you can do. And it's, if you're on TradingView, it's a simple, is it Alt or Command I think is what it is. So, pretty easy. You can also just
Yep.
come on here to the scale and invert it here as well. But yeah, Alt I or Command I. Look, I mean, guys, what I've really been focusing on, Landy, is the fact that even though we had this big sweep of that February low, which was, it's a big area for us to watch here on this move to the downside. That was last quarter's low. It's also right around the POC of this area from back in 2024 where we went sideways. That's also kind of right around there. It's here in the low to mid 60s. So there's a big area to kind of watch. The thing that really stands out to me right now that I've been focused on just trying to highlight um, is the fact that even though we did see a sweep of that level, we've not really seen any acceptance below that level yet. The only time frames really that you'll see that we got to close below that level is below the 1 hour. You
Yeah.
have to go all the way down to 1 hour, and then on the 1 hour you did have a momentary close below that on the subsequent candle immediately just put you back above, and you didn't get any closes below that since. So I think that says something. Does it guarantee that we can't go back below there? No, it does not. But it just shows that buyers did defend this level. There was some buying that happened here, um, and for the time being, this level seems to be protected. It seems to be defended a little bit. So I am watching it. I do think it's key that it really didn't get a close below on any of the other time frames. So, and this is just me, my personal take, and what I'm doing. I'm not really looking to to position for more downside unless we go higher or I get a close below. Here in the middle, I have short exposure from higher up, but I also did grab some long exposure on that move down. So I actually managed to I waited for the drop to finish, and then on this little pullback here on this retest, I did grab a foot soldier, as Lady Trader likes to say. So I grabbed a starter position, and then I added to it here after we talked about this pullback, essentially all of Monday and Tuesday, saying that I wanted to pull back right here into this area. Ash and I were discussing it in the DMs. This vector, talked about it with several people, several groups on several spaces and several streams throughout those 2 days. So we got the pullback. I was able to scale in here with a little bit more size. That did bring up that average entry cost up here. I'm now at like about 60.8 or 60.9, I think is my average entry now here for that position. But it's right now it's looking pretty good. I did get a TP1 right here coming into these highs. I did move that stop loss now to break even. So I'm essentially in a free trade. If this wants to continue higher, I'm happy to peel a little bit more of that as take profit levels hit to the upside, while still holding that short exposure from up in the upper 70s. And if something changes, I think if this goes high enough, I will probably look to add to that short again. But for now, I'm just kind of I'm letting it ride. So I'm kind of I'm exposed in both directions. I'm gonna eventually get to a point where it's kind of like net neutral, but right now it's moving nicely. I wouldn't mind one bit if this thing ends up going higher than I initially thought. The idea that I had kind of thrown around, if I can remember which one of these it is, not that one, hold on. This was this like 4 hour multi-day, multi-session W that might be setting up here. And it's not fully confirmed yet. What I would like to see for this to really make me a little bit more comfortable and for it to also give me another opportunity to size into it once again, I would want to see this put in this leg up, this like breakout leg here above the midline of this W, right? If this is a valid W here, I need to see it break above here, above the neckline. And if it does that with some volume and a little bit of speed to it, like if it gets some momentum coming up here, probably, or I suspect around here, about 66 to 67 ish, on a pullback, if it comes up on a pullback, I will be very, very interested in taking that opportunity to scale, a little bit more into this trade. And validation still remains down here until this starts going up. Once it takes out whatever that next swing high is, then stop loss would go under that, and we'll let that puppy, head higher. So,
Yeah.
but nah, dude. I mean, I think it's got the potential. We know there's liquidity above. We know there's a lot sitting here at that last swing high that we got. We know that there's more up here at the quarterly highs as well, which was that 97, 98. I mean, Bitcoin could surprise us. I know a lot of us are talking about the levels to the downside, and I think those are totally valid and totally possible. But I'm also open to Bitcoin surprising us a little bit. And what I think I would be looking for, and I'll wrap it up with this to pass it off, is that monthly close, man. That monthly is also going to close the quarter. It's also going to close the first half of the year. So I think it's a pretty important time for us to be paying attention, is coming into, these next 18 days or so.
Very,
And dude, if we get a close above here, above essentially the closes of like Feb, which is right around like 67, I think that's going to be a very, very interesting area. We would essentially have almost like a double bottom in terms of the closes, and almost equal lows in terms of the wicks as well, which would be very, very, very interesting here on this monthly chart for BTC. And it also, even on the quarterly, would be very interesting, because we'd be pretty close to almost having a flat bottom here on the quarterly closes as well, with some nice wicks to the downside. So, dude, it's going to be interesting. That for me is really what matters, is waiting these 18 days to really get, very, very convicted. I see a lot of people that are already highly, highly convicted that the low is in. Some people are very convicted that the low's not in. I think it's like, let's wait these next 18 days and we'll have a little bit more clarity. I think we'll have a little bit more information to make that decision.
Yeah. I agree. I agree, because it would start to look like a beautiful sweep
Mhm.
on the monthly. On the quarterly, it would start looking like, well, I wouldn't say a bottom, because if you go to the prior monthlies with that bear lower high,
Mhm.
because you're on the monthly, right? I have
Yeah,
this
this is
this
a
on the
monthly. Yep.
screen.
Mhm.
So if you look back to 2021 going into 2022, that first lower high, 48,240, and if you look at the bottom side structure there at the 38.5
Yep.
close, we had a nice sweep, right?
Yeah.
And then we got bought back up, and while we did get a nice bump up in the near term on the close open, it was just another month and it was back down, but we've already painted this high. This high is essentially anywhere below, what is it? What's the swing low from last month? Anywhere below there, this is a valid lower high on
Mhm.
divergence. So that would be what, 72,400, right? And that's right around where you're looking potentially. If this works out and meets the conditions that you're looking for,
Yeah.
this could potentially is where you're looking to go and test, right?
Yep. Yeah, and even then, right, like this would be setting up the opportunity for the bulls to then shift structure to the upside if they were to take that, right?
Yeah.
There's still some levels to the upside, but I think this would be like a very clean and clear first step that says, okay, the opportunity's on your side. What can you do with that? and then if they decide to take it, hey, I'm all for, some upside. 6 months still looks like there's a lot of pressure to the downside. The yearly does as well. This is why I say the long term levels still make a lot of sense to me, just based on this yearly chart and also the 6 month chart. But um,
I agree.
is there a world where this comes up and sweeps 82 again, and maybe even gets close to that last 98? Could be. It really could be before we go lower. We'll see.
Well, before we move over to Ash, I wanted you to go back to that. I believe it was an hourly. You were looking at the
Hmm.
PVRSA candles, otherwise known as vector candles. And
Hmm.
for those, and can you go ahead and highlight that candle that you were watching?
Yeah,
Because I
this one here.
wanted, yeah, some of my audience might not be familiar with this because I give on these updates for my charts. Um, I don't dive as deep as you guys do, which is why I think it's great that you guys have come on here and hopefully I get more of you guys. Yeah, Mr. Spread, I sent you a DM back. But I don't typically get into kind of the depth of knowledge that that sometimes you guys get into. So for those in the audience, when he said vector candle, it's otherwise known as it's like a high volume candle. It's known as price, volume, support, and resistance analysis. But essentially, it's you're looking at how what the strength of that candle is in terms of volume coming in
Yes.
versus the prior candles. So when you guys were evaluating this, because I know Ash, and is this Ash's indicator?
Yeah, this is a gentleman suite. Yeah, this is
Oh,
a gentleman
awesome,
suite. Yeah.
awesome.
Dude, I use it. It's the one thing that I use pretty much, other than the volume profile, is I use the gentleman suite for the volume candles.
Yeah,
Yeah.
with PVSRA
Yep.
turned on.
Yep.
Awesome.
Correct.
So, one of the things that I wanted to ask about this, and for anybody out there in the audience that's not familiar with what that is, just think about it's like a higher volume relative to the other candles, and
Hmm.
then you can go ahead and you can look it up. There's plenty of resources out there. But I was curious because I see that on the bullish candles, there's and even the bearish candles, there's some different colors here.
Yes.
Is there a difference between the orange, and the green, for instance,
Yeah.
on the way up there?
100%. Yeah, 100%. So what they're telling you is quickly, without having to pull up like your actual buy sell volume bars down here, and looking at the volume bars and saying, okay, which one actually had a nice push. You're able to just quickly spot these. So the orange ones are 300%, I believe. Is that correct, Ash? They're still 300%.
Yeah, orange by default is 300% to the
Yep.
upside.
And then the other ones are, I think the blue one is 150, the green is 200, if I'm not mistaken. Ash, is that
Correct.
correct? So yeah. And
So
then for the downside,
your
you have
strongest relative is
magenta
gonna
and
be your
red.
orange. Okay, so your
Yep.
strongest here is going to be your, orange candles then for relative. So for the audience, that's relative to the most recent what's your look back on that, Ash? How many candles is it?
So it works in off the last 10 candles, but we also have there's some additional logic behind the scenes that also, don't just gauge, because you can have high volume with zero movement, right?
Yes.
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 So it also tries to smooth out some of that noise to help with not highlighting candles that have no movement.
Yeah,
But
between the
yes,
open,
the
high,
simplest way to
close
think
low.
is volume. Yeah.
Okay. Yeah, so
Yeah, I put it here on the screen, by the way, Landy, so people can see that the color, and the relative percentage that goes with that. So
yeah, so essentially, for the audience and for those that might be absolutely new to them and foreign to them, essentially, I would break this down as it's higher volume relative to the most recent candles. In this case,
yes,
around 10, and there's some other special sauce in there between the open, high, low, and close,
yes,
um, or close low. I always say that wrong, but this is a good way to gauge when demand came in. In this case, it was demand that pushed price higher. So what Bits
hmm
was describing is the retest of this area is where he was taking his long from,
correct.
which is very similar to, I have a completely different method of analysis than you and Ash and others. Although I'm very familiar with these types of analyses. I But we came up with the same areas because when we came back down to 61, I took a long. Now, granted, I did take quite a bit off the table at
Yeah.
63.8 today, but I'm leaving some on, looking for the exact same things that you were looking for. So I thought this is a really good for those that really love TA or want to learn more. What you're seeing here is it's a very refined system for evaluating the setup for a potential trade, and then of course gauging your risk based on that, or your R to R, your risk to reward.
Yep.
So beautiful, beautiful, man. Is it
Yeah, man.
anything else you wanted to add there, Bits, and before we throw it over to Ash?
No, I'm happy to throw it over, man. I mean, I got to shout out the Gentleman Suite. It's I don't think it's for everyone, but if you use volume as like one of the things that you really look to, I think it's a great ad. Like a lot of what I do is volume based, right? So I use volume profile. I do use the buy sell volume to try and kind of gauge what are candles that actually have true volume and momentum behind them. And so just having something like this on the candles already. There, TradingView does another one where it does like little fat candles, like it makes them bigger based on volume, which does something similar. But I just like the colors. I think the colors are neat. It makes it look different. It's easy on the eyes, and yeah, you can quickly tell like what is one of the other ways I use them. For example, is like a high volume push into a trap area. A lot of times is kind of a
Yep.
sign of like trappy type of behavior versus like something that goes up on weak volume or non-existent volume. So, but yeah, no, this was I think this was also a golden pocket on a fib. I want to say
Yeah,
it's
it's 618.
right in that 618 area.
Yep.
Yeah. So there was some confluence. Volume profile also was kind of hinting a little bit at like watching that area. So, no,
So
dude, it played out nicely.
So for the gentleman in the audience that's asking, he says, "What is a volume indicator?" This is called. These candles are PVRSA. They're otherwise known as vector candles.
Yep.
And you can look up if you want to look it up. You can look up vector candles. You're going to get PVRSA, and then you can there's all kinds of different iterations of it. Ashes, I would say, has some special sauce, more than likely.
Yeah.
But you'll see generally when you're looking it up online, you'll see just the basics of what the percentage is and the look back and like all that kind of stuff, which is how many candles it looks back. But it's brilliant, man. I love your analysis. I'm gonna pull Ash in here.
Yeah, get him up here, man.
Yeah, I know you've got some charts here, and unfortunately, Ryan's having some trouble connecting. And I know that, man, this is beautiful. Why did my charts look like a freaking mess? And look at your guys' charts.
Because you're not an Aussie master wizard dev,
Yeah,
so,
man. Like, look at this.
Yeah.
It's all fancy looking.
Yeah, man.
It took me 12 hours to make it look just this way. There's zero analysis underneath. It just looked pretty. So.
It was the crayons, yeah. Got it.
It was exactly the crayons. Bingo, bango. But that was awesome, man. You've also been killing it recently. Well, not even recently, just
not doing too bad. Not doing too bad, man. Yeah,
it's been good, man. It's been
you
good.
guys are keeping me
like
sharp. So you
guys
keep me sharp, man. You guys keep me sharp. So I appreciate that.
Yes, stuff, man. Well, I guess first of all, thanks for having me.
Well,
and echoing all the same sentiments that you guys had, man. Like, yeah, look, I giving small accounts like mine a little bit of exposure is it's forever. We'll forever be thankful because it is very difficult to grow certain some of our accounts when we only say stick to just TA and we don't spend as much time on spaces and things like that. So really appreciate that. But whilst I normally focus on some sort of lower time frame stuff, I thought I'd mix it up today and actually show some of my much higher time frame outlook pieces for where I see us going. So what you're looking at here is this is the 1 month BTC index chart, and I've just done some very generic squiggling on here, and what you see there is one the indicator that we've been talking about, which is the Gentleman's Suite, and standard PVSRA volume pieces down the bottom, which I don't really need right now, so we'll hide that, and our oscillator that we use. So this is something that I've recently released. People will get access to that for free if they use our premium suite. If people don't know about that, either just check out my profile. It's the pin post. If you have any questions, feel free to DM me. I guess that's the end of the shill for that, and we'll just get into the analysis. So
what
you see here,
what are you naming the oscillator? Is it going to just be Gentleman Suite Oscillator, or is it?
It's just called the Gentleman's Oscillator right now.
Feels like a missed
it's a working
opportunity.
time.
Feels like a missed opportunity, Ash. It's the Aussie Cipher Pro, I think, is what you need to call it. I mean, it feels to me like the Aussie.
I knew you were going to go for it. I knew you.
Damn, are we pitching a rebrand already? Are we? Oh man! Look, tell you what, shoot me some names. It's as simple as a rename. It doesn't take a whole lot of effort on my side. So, hey, I'm happy to work with the people. But look, what you got here, I've done really basic TA. Straight line, cool. Tricky, not really. But what I want to show people is a few things that I'm looking at right now that's pointing towards some of my future targets where I think, or where I'm envisioning we're going to land for the bottoming ranges for this cycle. So what you've got here is our oscillator down the bottom and a few key little points here that I've highlighted. So this little line here is our 50 moving average, our 50 EMA on the monthly time frame. And as you can sort of see, in the last handful of times we've bottomed, we've come in around the 50, a little bit below the 50, below the 50, and now we're just sort of in and around, sort of tinkering around below, not quite closing below, 18 days left in the month, so we're sort of in no man's land at the moment on the monthly, but you can sort of see the pieces here where that I'm trying to indicate here. And this monthly uptrend, which is what I'm also using as a little bit of a confluence. Down here on our oscillator now, if you want to know a really quick thing about the oscillator, it's a very similar type of thing, like a market cipher type of situation. Again, I use my own special things behind it. So if you understand the way that waves and divergings like that generally present, you'll understand the basics of what I'm trying to point to here. And what you'll sort of see here is we actually have a monthly bearish divergence, okay? Which I found interesting. So I've marked that out, and where these wave crosses have started to come in on the monthly have been quite useful for gauging, at least historically, where our bottoming ranges have shown up, right? Yep. What you see at the moment is right now we're still sort of in the process of either bottoming or coming down. You can sort of see here where we crossed. This was giving us a signal that we've sort of completed. Similar here, similar here. Now that doesn't mean that we can't bottom here and come straight up. It's just data that we can use to help us understand, hey, no one's saying that we're starting the bear market at this stage. I think a lot of us are in the same sort of mindset that we are getting close to, if not in the bottom range already. But this is stuff that we can use that can help us sort of, particularly on the high time frame, to understand where perhaps you might want to start to, let's say you like to use a DCA strategy. These are the sorts of things that give you some confidence to assist with that, okay? So that's really it for the monthly. The weekly is actually where I find the more interesting stuff right now. And it's a little bit more noisy, but it's showing the same data. And this is what I wanted to also point out to now. So same layouts, same data, just right here. Now, what I want to show you is these are these circles that were below the 50 EMA on the monthly. Okay, same one, same locations. And in our oscillation, where you see, right down here, you see we actually formed a bullish divergence on our waves. As we came down, we formed a bearish divergence, giving us our tops. Another bullish divergence, giving us our bottom range. Bearish divergence for our previous top. And now we're in this, hey, where are we landing right now, okay? So what I'm actually looking for is two things. One, if you can see this pink and blue, this is our high time frame wave, okay? This is our monthly wave. You can sort of see it denoted over here. And the green and the purple are our weekly or our chart waves, okay? So for me to be really keen, what I want to see is I'd like to see this trickle down to, say, somewhere around here perhaps. Allow us to sort of identify a bullish divergence on these waves corresponding with a high time frame or monthly time frame wave cross. okay, that there will put me in a much more comfortable position to think, okay, I think we're pretty much done, right? It's time for us to start to form our bottoming structure. But until I see that, anything that I'm seeing right now, unless I start to see, really, high time frame impulsive price action to the upside, I'm still looking for some downside targets, okay? And what that is for me is I've got pockets. Okay, I never like to look at straight numbers for these sorts of things, but what I look at here, and this sort of speaks to that vector logic that Bits and speaking to just moments ago, is that those vector candles, they don't just mark where the volume shows up, right? Where the impulsive move might look, where it might originate from. They also are absolutely fantastic targets to look for retracement pieces to come back to, because it's effectively the scene of the crime that we want to see revisited, right? And this is why I've got 3 areas marked here. Now you'll see one of these has got a W, that's a weekly, and then this is a monthly and this is a weekly. So where I'm looking for price action to come into is going to be this range, okay? If that enters that range and we start to see this divergence sort of start to show up, that's going to be a tick for me, okay? But that's going to be that's probably going to be a pretty solid, for me, a DCA point, okay? But that's my more bullish case. If we see this not hold, or we start to see wicks and those wicks start to get filled, those sorts of, where they're not really done, you're starting to give us signs that, look, buyers have tried to step in, there's good demand here, but it hasn't held up. That's when I'm going to start to look to this range. And again, same sort of thing. Am I going to start to see some of those divergences show up on our waves? Am I going to start to see volume come into the upside? Yeah. Okay. All the things that are going to give us that information. Sorry, Landy, I didn't mean to cut you off, mate. What's up?
So when can you double click into the main chart so I can get a little bit clearer view for the audience here on some of your ranges for your purple zones?
Also, you want lower time frame or just zoom in?
Just zoom in a little bit. So essentially, that main area is just below the 2 vectors, right? And just below that monthly.
Yep.
So you've essentially got about 40, what is it, like 42?
Yeah, 42, I think about 52. Yeah, 42 to 52. So that's like about a $10,000 range there.
Okay. I actually have a very, very similar range. It's different layout, but very similar range for any kind of another leg down. So that's why I was curious right where they were, because this lines up with your vectors that put in the high just prior to the spot ETF launches with the green red, and then the spike down to the monthly at 38.5. You got your white line there, and then the move up before the 2 bigger vector candles hit. So yeah, this is something that Cade asked on stage the other day for the market talk space. Was he was asking like, hey, where, if I was to put you on the spot, where would your low be? And I said 38.5 to 42.8 or somewhere around there, right? But I would be looking primarily for closes coming in around 45.5, which is a monthly.
Mm-hmm.
So that's literally confluent with that first bigger range that you were just pointing out, that you're pointing out here.
Yep.
Now, for your oscillator, do you have any projection for how deep that would have to go on the oscillator for it to actually get there? And would it create a divergence?
No, because this is the thing, because these things are calculating based on the current data coming in. So it's the same way, like, oscillators should never be used as a primary, right? That's why I always talk about them using those things as a confluence. The price action is always going to be, to me, the most important. I don't care if an oscillator, people who they just trust, like, oh, I trust the signal because the signal says buy. I'm not like that. I'm looking for price action first, and then if I see price action that is giving me much more bullish sentiment than, you know, a low time frame bounce. No, like a bit of indecision, like we hit an area and we just sort of fluff around there for a long time. Those are sorts of things that go, okay, to me, that's probably, it's either trying to start to form a bottom, which is going to be a process over time, or we're going to see it cut straight through, right? So I'm using this as a tertiary confluence type of indicator to assist me with my price action analysis to give me a stronger idea of when I believe the bottoming ranges are in.
Okay. Yeah. Awesome. I mean, that's primarily how I do it as well. So, and I think that generally in the circles that we all run in, this is kind of how we utilize just about any kind of indicator. You know, we have for a long time, there was indicator fever. Remember, back in 2018 to 2021, everybody had a million different indicators and it's going to call the low. It's going to there's no such thing, right? It's a confluence of you watching price action in combination with the confluence that you're seeing in other metrics like an oscillator, like volume. But obviously it starts out with trend and support and resistance, and then, you know, moves on to all those other confluent things. So, and primarily this would be a momentum based oscillator that you have on down there.
Yeah,
If you're
exactly.
going to generalize it, right? Yeah.
Yeah, absolutely. Absolutely.
That's awesome, man. Is there anything else on the weekly that was interesting to you that you're looking for here at this particular low?
Yeah, there is. And I did a post about this last night. It's this one here, where if people haven't seen this, check it out. But all I've done is as I'm trying to help some of the things that I put, like I post a lot of content. A lot of it's low time frames, some of it's moderate. Like it's I post lots of different things about lots of different time frames. But I understand that it's very easy for people to be overwhelmed with the data, right? And so I did this post last night, and what I was trying to highlight, and it's really not like anything special. It's really basic stuff, but it's when you're trying to determine, like, if you're unsure what trend you're in, or you got people saying this is a pullback and we're going higher, or this is a bounce and we're going lower, or whatever, you know, the sort of the bias might be, is volume is king, right? And what this does here is this screenshot here, this can actually, if you can read volume, you almost don't even need a chart. Like, it sounds like a weird thing to say because we love drawing lines on charts, particularly in crayon. But
Yes.
like, when you see this sort of stuff here, like, do you really need a chart to tell you that price is going lower? Do you need anything more than this to tell you that price is going higher? It's exactly the same thing. And when you flip across to this, it's quite clear what's going on, right? It's quite clear.
Yeah.
Now, you can see here, like, the biggest spikes are sell volume. Like, there's no debate that you're in a downtrend, or you're in a bear market. So if people are like, let's say you are super conservative, right? And I would put myself very much in that sort of group. Is if you're scared to DCA, or you want to be a lump sum type of person, you want to be sure, you don't want to be like, oh, I don't want to watch what I'm doing. I mean, realistically, if you want to be a little bit more conservative, wait for something like buy volume to start to take out the sell volume on a higher time frame, and you've usually found yourself a relatively decent way to catch not the bottom or not the top in the inverse, but you've generally found the range where you've probably caught the right direction, right? And then if you're not using leverage, if you're just, say, a spot holder, then you can generally use that and be pretty relaxed that you've done the right thing, you know. So this is just something that, like, if you have this, have a read. It's really basic, but it's trying to cut through a lot of the noise that you see on the timeline. And volume is still, to me, like, numero uno in detecting what sort of phase you're in, right? And it's not any more complicated than that, Landy. At least for me, mate. At least for me. So,
Yeah.
that's really all I've got. I didn't really feel like I needed to go anything too low time frame today. Bits of that covered in spades today. So that's probably predominantly what I wanted to demonstrate today, and hopefully that's been to some degree useful for people.
Yeah. In fact, I think this is great because between the two of you and your different views of the chart, and granted, you have very similar styles, but I have a very different style. And for the audience that is typically watching my videos every Monday, Wednesday, Friday, or if they see me charting with David Gockstein on a stream, um, I have a very different methodology, but we're arriving at very similar, if not the same, end results. And one of the reasons that people often go, well, that's crazy. How does that happen? Well, the reason that it happens is because we're all referencing the same data using different methodology and arriving to at some similar conclusions about that data. And and I think first off, this is beautiful. And I love the purple. Now I know where my purple crayons, my grape flavored crayons went.
Well, your
Um,
charts wouldn't be purple, Landy, because you eat them all.
Yeah, well, it's true. It's why the Aussie has them now. He took he took all the grape crayons out of the package before they shipped them over. So I've been eating just red candles lately. I'm sorry, red crayons lately, and they're either strawberry or cherry. I can't quite determine which. But realistically, many of us that are, I would argue, actually good at analysis of price action, because there's a lot of people that because anybody can post a chart on the internet, right? And often those charts are used as bait, especially when it leads with Bitcoin, and then they start posting charts about shit coins that they want to dump on your head. Usually that's not actual deep analysis of price action and giving you the different scenarios and what it is that they're looking for with invalidations and stuff like that. And this is where my main goal on Fridays from now on, I kind of described this last week and this week, and this is more just to kind of um, for the audience. My main goal, as Ryan hops in and out, poor guy can't stay on stage. I don't know how that's he's gone again, but he'll be back. He'll be back. Um, my main goal is to highlight a few different things. One, different analysis coming to the same conclusions that I am, with really practiced, really smart analysts that understand the game, that actually trade, unlike some purveyors of charts on the internet who do a lot of other things that are unrelated to trading. But more importantly, is I think that there's a lot of people that are scared about where price is going, and they see really bearish calls, they see really bullish calls, they see this is the bottom, this isn't the bottom, this is the top, this isn't the top, and they're all over the place. And they're like, "Well, I'm just going to walk away." And in times like this, you do not want to walk away. In a bear market, you want to be here so that you can identify that opportunity. I know we talk about this, and Bits is like, I hear this every day. But and so does Ash, because I see you in the audience. But it really is important, because for those of you that maybe don't chart and you're just trying to get some Bitcoin, you're just trying to get some other coins, because when Bitcoin bottoms, everything's going to go up in the market just relative to Bitcoin. Some are going to outrun it, some will not outperform it, some will. But fact of the matter is, you want to be here in times like this. And I always reference, like, as long as you're paying attention during the bear market and you have a plan to accumulate, whether it's here or lower. I think value is here and lower, because really the risk to reward that Bits laid out on one of the spaces today was brilliant. He's like, look, it's pretty much 100% to the downside to zero, 100% to the upside. So your risk to reward is actually way better here and lower if you're going to accumulate spot, right?
I missed that one.
Oh, it was brilliant. It was so brilliant. I freaking loved it. But like, yeah, like here in lower, if you're a long-term investor and you're looking to get yourself into Bitcoin and you realize what it is and you understand what it is and why you want to get it and you're willing to hold for the long term, like this is, this is opportunity. You don't want to walk away. Everybody says sell in May and walk away. Well, the market sold off in May and some people walked away. And those same people will come back when we're in a bull market, like what Ash was just pointing out. And those same people will come back in a bull market and tell you that you're lucky. Well, realistically, you're not lucky if you were planning for it. So I see Steve here. What's up, Steve? I see a lot of friends in the audience here. It's good to see everybody. Um, Ryan, if you are here, I'm going to bring you back in. I know you are having trouble connecting and staying connected. Did you have any questions for Ash or Bits about kind of what it is that they're looking at, whether it be this, or did you have anything that you want to, because we have Ash obviously developed this suite of indicators. And then of course, Bits, who's super practiced in using it in his analysis. Yeah, you've got the prime opportunity. By the way, Ryan, of course, of Wolf and ATC fame, folks out there know him pretty well, I believe, by now. This is like a great opportunity, I think, for someone like yourself who is just beginning their journey in adding technical analysis to your toolkit, to ask some questions about what it is that we're looking at. If there's any kind of burning questions you have, or if you want one of us to pull up a ticker and take a look at it.
Yeah, I
Like,
don't know. Can you hear me?
yeah, you're there. I
Oh,
hear you.
okay. Yeah, I have no idea what's going on. I've used Chrome, Safari, my laptop, my phone. I don't know. It just keeps kicking me. Maybe that's what it means to be a pleb, I suppose, or a newbie when it comes to charts. So, no, I guess the main thing as it relates to the charts. I mean, I've spent so much time listening to you guys, and the wealth of information, and just uh, like it's amazing. I've said it before. The more you listen, the more confused you get, but the more it makes sense. And I know that statement is so contradictory, but there are these moments when you start to see in different colors, like, and I'm not talking about crayon colors. I'm talking about just
Oh,
like perception, right?
yes.
You know, just structure, short term, long term, high time frame, low time frame, and Ash, that point that you just made about like just look at the volume and you can probably determine, or you can close your eyes and in your mind's eye you can probably figure out what the chart looks like. I mean, I wouldn't have even thought about doing that, and now like that's going to be my go-to before I do anything, whether it's high time
Okay.
frame or low time frame, new ticker, old ticker. So like it's just those little tidbits of why it's so important to, if you want to go down this journey. I mean, many people don't. I mean, I'm older. I'm spent a lot of time in business, and I've always been fundamentals and macro. But and again, I know bits. I say this over and over and over and over again, but I do push myself. I like to learn new things. And on January 6th of this year, Bitch challenged us all. He said it's going to be a bear market, and you build in bear markets. So I challenge everybody to get better. And I took that seriously, and I dug into the charts because I'm like, I generally get things right uh, in terms of the way I see things moving, but I'm either too early or too late. And maybe this TA stuff can help me, or maybe it can't. I don't know. I'm going to start the journey, but I'm going to give it a fair shake. And I'll tell you, the more I get into it, the greater I feel about my decision, because there's two things, and because this is what I think everybody wants to know, if you're new or if you're listening, or by combining all of those things, what I've effectively done is because there's an opportunity cost of deploying capital, right? And if you're too early, that capital is sitting there and it's not doing what you want it to do. And if you're too late, you may have missed something. I'm not saying I'm spot on, pico top, pico bottom by learning TA, but what I am is closer to the time of execution. And that means that my money's working harder and more efficiently. So,
Mhm.
I don't know if that's what you were looking for, Landy. I'm just giving everybody kind of a sneak peek into my journey. I mean, I'm only 8 months in, or 7 months in of actually getting into the charts. But I've been listening to y'all and been part of the groups for about 18 months now. I can say though, like Landy, just looking at the way you come at things, like you have the ability, I would imagine, to do what Crypto Crank does, on a very short scalp standpoint, because you understand the charts, but you also have the ability to do what Ash and NatNat and Bits and all the other folks. Like, I don't want to leave anybody out, so no offense to anybody, but you can make longer term investments, but you can also evaluate the fundamentals of the business and the trends of the market, right?
Yes.
So, that's kind of, we had talked a little bit before this, and here's one ticker I want you guys, if you want to pull up. It's a theme ETF, because I think themes are really important right now. It was talked about in the macro space earlier. Pull up QTUM.
QTUM.
Yep.
Yeah, if
You want to
Ash
bring your chart up, Land, or you want me to do it?
Ash, you can do it. Ash Bits, either any of you, whoever wants to, and I can get a multi-screen up here. But what I'll do is I'll highlight if you want to pull it up.
And there's a reason why I'm asking
You
for
said it
this
was what's the
particular one.
ticker? QT
QTUM.
QTUM.
Now, it's not a specific quantum stock, it's an ETF, because what I found is the more I learn, the more excited I get, the larger number of, the more number of tickers in my portfolio, and that generally doesn't work out well. So, I've kind of, as I've done really well, and thanks in large part to working with Nat and all you guys, I've trimmed significantly, but I realized kind of going into the second half of this year, I need to start to consolidate into maybe more themes and ETFs to continue to, have a.
Did we just lose Ron again?
Yeah, I think we did.
He's gone.
I think we lost Ryan and Landy. Just me and you now.
No, I'm here. I'm here. Yeah, I was just trying to get Ryan back in the game here.
I was about to announce that we were
Taking over the
inverting-
stream.
We were taking over. And this is the beginning of our 24-hour stream now.
Let's see.
It's
so
about to
there's-
get live. All right.
I'm trying to figure out how I can switch you guys, because it's not actually very clear how I can switch you guys. So if I maximize,
I can see Bits' chart. Oh, no, it's my
Okay.
chart again.
Okay, so
Yeah,
that's your
I
chart.
think he was trying to side by side it though, maybe, or something. I don't know.
Oh.
Can you
It's
side by side on
cutting
it or
the-
no?
Yeah, I can, but it cuts them off. It's like, so it's cutting
Mm.
off price and volume and on one and
Gotcha.
the other. So why
Nah,
don't,
I mean,
why don't we hop back to Bits here now that I got Ryan back in? Hey, Ryan.
Yeah, I don't know what to tell you. I mean, obviously it's old guy stupidity, but I
No,
don't think so, because I'm
it
tech.
seems like an internet problem, honestly. It's Bits. I knew you were gonna. Damn it! He just dropped right as you inverted the chart. That's
Bullish.
wild. Wow! Holy crap! The moment you clicked in to invert, he immediately dropped. That is no way.
He was sitting on top of it, and then when it flipped over, he fell.
No.
Too funny.
Yo, that is wild. Poor Ryan. Hey, buddy, we'll come get you. We're gonna throw our life. We're gonna. Ryan, you're in the audience there. I'm sure you're hearing us here delayed, but he said he's got to
He goes, I give
on
up.
But what we'll do is I'd love to have you take a look at the inverted version of the chart for him. And then I want to see what Ash
Oh,
is gonna
man.
say.
That's so funny. No, like I wanted to pair it against gold really quickly to see what it looks like against gold. Interesting. Oh, but I am inverted still.
Yes, sir.
Give me a sec here.
You gotta throw
Accidentally on purpose.
accidentally on
Accident
purpose
on
for sure.
purpose.
Yep.
No, but this is interesting though. It is breaking out against gold, which is pretty cool.
Yes.
Very, very flat highs here. Okay. Nice. Look at this vector, which at some point, right, if this thing, is doing something like this for a little bit, like I'd be looking here for sure. A pull back into this could be a pretty good opportunity. Yeah, this is an interesting chart against gold here. Let's see here. Yeah. Oh yeah. Look at that breakout.
Beautiful.
Beautiful, beautiful, beautiful. On the weekly, this one here is definitely the area to watch on that one against gold here. Yeah, very, very, very clean area to be watching for sure. No, interesting chart. I just wanted to reference it against gold. So it is going to outperform against gold. Let's look at it over S&P really quickly just to see relative strength. Oh man, yeah. This is a mover. This is a mover for sure. Yeah, so far, I mean, this is one of those that I wouldn't want to get in the way of, but I wouldn't, for me, like my personal style is I wouldn't be jumping into this until it gave me a pullback. And, when it does, I'm happy to play. I will say on the monthly here, I mean, we still have, 2 weeks, a little bit over 2 weeks, but if this starts to kind of stall and hang out here, I would be looking for it to come back down to the previous month lows at least, and maybe give a little bit of a cool off, a little bit of an opportunity to position in there for people that aren't interested. But this is looking good. It's looking strong, whether you're looking at it and it's standard format or in inverted format. It's on a mission, and it doesn't look like it's slowing down to me anytime soon. Happy to hand it over to Ash. I mean, Ash, if you want to add any, I don't know if you're going to count. I don't know if you can see any like clear pushes on here.
The counts are rough on these things, man. Some of these things have just been sort of going parabolic. I'm just looking at some basic stuff like, I mean, it's quite extended even off the 21 on the weekly. That's getting a little bit spicy. The problem is if you've got like big sell met with big buy, right? So it right now, it doesn't look like it's quite done. You can also see here, like they tried to break it down here. 1, 2, 3, 4, 5 daily candles off the 21 as well, and now they're back into a seemingly uptrend. I wouldn't be. These are the sorts of things that they can go a hell of a lot longer, than logic would dictate.
Yep.
I don't think you're going to see. And this is a cold take from like without me, this is just like if you think about NVIDIA, right? I don't necessarily think you're going to see, and I could be completely wrong here, but this is my take, that you're going to see AI or AI parallel stonks have significant corrections, I think, until NVIDIA's screen reading software. That's not the same thing. Until you see NVIDIA actually start to cool off significantly. I think it's hard for that to happen. And I guess what we're starting to see is that rotation into, let's say, more fringe AI plays. I think that's when we start to see that restart to span out. I think that's going to start to getting to the sign where we go, it might be time where there's a bit more of a significant cool off. But right now, like that chart, unless it decides to do this, lower high, and then give us something like that, I don't necessarily think these things are telling you they're done. Because this could literally just do this, right? Even though it's come down here, it could just as easily do this and then take another leg up, There's no there's no weakness here yet. Like you're literally seeing increasing volume here. You know, it's still increasing. So
Yep.
I'm not too concerned with this at the moment.
The
Doesn't
weekly
look
does
weak.
have 3 of the Gentleman's Suite trend exhaustion
Bang.
bangs, man. Yeah, it's got 3 of them in a series. It had one over here, but it wasn't the double whammy. But you've got
Yeah.
3 of them in a row
But
here.
look at these though. Like it didn't even really like little cool back down. Like even if this did do that, right?
Yeah.
And if you look at what it did previously, if it's gone, hey, things are getting weak. I mean, this could just as easily like do similar to this.
Yeah.
And let the 21 slowly catch up, you know. And then it could do that again. You know what I mean?
Interesting. So my view is actually a little bit different than you guys. So let me actually pull my chart up here and I'll show you what I'm looking at. So very simply, I have triple set Bollinger Bands here. I think that's showing on screen on the stream. Yeah. Yes. It looks like
I think this is wrong though, Landy. This thing looks like it's on the 10th standard deviation to the top side, not the 3rd. Man.
Well, this is a monthly, so look, very, very easy to identify here that this is a move still in progress, and it really is going to come down to, in my opinion, how this monthly candle closes.
Yeah.
Is going to dictate whether or not we see this start to slow down and then come back in for a correction. So obviously, the big area here to stay above for me would be 115.50, right? Because if it takes out that higher low right there at 101, and especially the swing low below it at 98.21 as a zone on the lows, that's kind of the red line. Because if it's already breaching that, it's already below the basis, which is just a 20 simple. Yeah. And in this case, that's already a big correction, even to get back to
40%. Yeah.
Yeah, it's massive.
Yeah.
But as long as we are staying above the upper first standard deviation here, which is at 128.30, so just call it 130 even, then this is continuation. Even if it corrects down to it, it's just it can just keep chugging away at the still expanding to the upside. This here is not showing exhaustion for me yet on the monthly time frame at 96/90. That's just it's a volatility metric utilizing BBWP or Bollinger Band Width Percentile by the caretaker there. He's very, very well known on TradingView, for those that are wondering. He just took Bollinger Band Width and Bollinger Band Percentage and did a calculation with it that is direction neutral. In this case, expanding away from the basis band, you're getting the expansion to the upside, and it's not overheated yet. Although at the close of this month, it might very well be. In fact, I'm curious to see what it would be or where it's at in terms of its actual chart here. Oh, hey, D7R, I've got your RSI on there. Anyway, shout out to D7R. He's always in the Wolf Bitcoin.
Yeah, I see him all the time.
Yeah, he's also just wizard like Ash when it comes to developing indicators. Yeah, this is telling me that this would take at least a month or two to actually top out and then get under the moving average here, which means that we could still see continuation to the upside. And then it's all about structure.
Yep.
So right now, weekly, what I'm seeing on the weekly is nothing bad, especially with the close this week. Closing where it did after swinging the low and failing to lock in a high on a closing basis here. This here at anywhere below the 152.30, even though the swing is all the way down, and this is compression to expansion, it is topping out, but this can continue. What you'll see is for volatility bands and volatility sets, what you'll see is the what am I looking for? Am I looking for a drawing tool? I think I'm looking
Crayon
for
tool.
Yeah, yes. I ate all the crayon tools and the brush tools. So give me a second here. What you'll see is even if this goes sideways, we're going to continue to see, as long as it's trading above the basis, we'll continue to see the upper second and upper third continue higher, which gives further upside targets as the upper first begins to move up. Right. So where I'd be looking right now is I'd be looking to see if this gets any kind of a close below 152.30. It will lock in the high. It's also screaming hot on a regular stochastic, which is not a Stoke RSI. For those that use Stoke RSI, understand if you're using RSI and you're using Stoke RSI is an indicator of an indicator. It's just an oscillator for the RSI. You might as well just look at RSI and then use a regular Stoke. In my personal opinion, that's not for everybody. You have your own systems, but if we were to start, yeah, this wouldn't even throw a bearish divergence. Are you kidding me? By the way,
Nope.
this holy shit, man, this is strong.
Yeah,
Yeah,
that's
this move is not
that's
over.
bullish.
This move is not over, man. Especially with a close like we just got this week, closing on a new all-time high. This is profit taking territory here and above, right? Because it will correct. It's just a matter of how far can it go. I mean, could it get up to the 180s, 185s? Absolutely. It already swung up to the high here on this side. We swung up to the high at 170. So, if it was going to spike up further, I'd be looking for this to continue up upper third to around, because it's been tagging the upper third the entire way through. I'd be looking for this to actually head up to around 180 to 185 pretty easily in the coming weeks, as long as it's holding that 152.30 floor. And then week to week, I'd be extending that to the upside. Daily probably looks, yeah, daily's fine. This is actually bullish. Got continuation drives, needs to re-enter the bullish control zone. I'm curious here. What would we get on a hot read over the SMA? We would get above, 166. And what did we close at? Closed at 161. So above 166, this is entering not just the bullish control zone, but getting above a 5-period moving average. Yeah, this thing it's still cooking. I would just be careful. I'd watch 152.30 to the downside. And realistically, from the daily perspective, I'd be watching that 152.30 to around the 147.51. But if you've been taking profit in this area, good on you. If it loses the lower first, it's going for this area down here on the daily at 137 and potentially more down to the 130 area. But when I look at this monthly, it's all about this area between 102 and 115. You want to see the top side hold, and can it front run it at like 120? Absolutely. But that would actually be a value buy here. If it holds up, but you're looking at it possibly digging into the structure there and causing some issues. Any thoughts, guys? I know that I'm just doing like
The 200 level looks interesting. I threw a quick trend-based fib on here.
Let me go back to your chart.
Just of like this move off of the lows. And you can grab either of the lows. It's going to give you pretty much the same thing. But basically bottom to that swing to this here. And that gave you this trend-based extension here on fibs. Interesting that this was a nice clean flip of that 100% extension right here. You can see how clean that is. So the 1618's coming right up here at 201. So yeah, interesting. To me, it's got upside. Even if it came down and took last month's low, I think it would just be a little cool off before higher. Quarterly's just not screaming that it's done yet. We need to see some kind of hammer print at some point on this thing to really turn it around. It's just not there yet.
Interesting, man. Yeah, that's a really good confluence, because I'm coming up with a 5-day. I like to use when I'm on higher term timeframes, I like to use something like this. So like a 5-day for continued expansion. So volatility expansion. Once we hit expansion, above the highs, we met that, got above the upper second. That's full expansion mode. And we're holding right above that 147.50 on the 5-day. And this has got, when it opens on Monday, it's going to have that 4 days left to go, almost 5 days. So it's a full 5-day candle that just closed in here after tagging the upper first. So I would say for Ryan, absolutely be watching to the downside. You don't want to see a breakdown below 147.51 to 152.30, because that would beget, well, I mean, maybe you do. I don't know what he's looking for. But if you were to see that, we're likely looking at a deeper correction to come back in, somewhere around the 120 to 130 to the downside. That would still preserve structure on the higher term timeframes. And then to the upside, you could see 185, 186 up here, 180, 184.95. This is going to update to 185, 186 on Monday. So, and that would be a path for continuation to 200 for that 1.618. So your 618s, right? For the fib levels, absolutely attainable. I would tell you, I'll be honest for Ryan, because I believe you're still in the audience there. I would tell you, this is the latter stages, in my opinion, of this move up, and before either the wider correction that's either going to happen from here or from just a bit higher. And I think it likely goes in for a weekly correction. And then it's about what kind of structure does it preserve. But yeah, it's strong, man. This has been cooking for a while too. The monthly's wild. And I'm curious, what are you looking at there, Dev? I keep calling you Dev because you're Dev here, but you're Ash.
Yeah, no, that's cool, bro. No, I've been quietly just keeping an eye on Circle's correction. Just the last few weeks. So interested to know what you guys are thinking about how Circle's looking right now. Because I was tracking it all the way through here. And when I saw this, I mean, I haven't talked about this on stream with you guys here, but I play like a 3-wave impulse. And I always felt like this was too short and not volatile enough to complete the move.
Mm-hmm.
But after we saw this and this, I was like, okay. And now it's just fizzling. And the best case I can see right now is for it to come back down into this gap and maybe form a base. But if it sort of does something like this, I'd be worried that we're not going to see not zero, but obviously it's not looking. I mean, I think it's almost certainly going to be coming down into this $70 range. We might see negative prices.
As soon as you said that, I thought about bits. Well, the R to R is either 0 or back to the all-time high.
Zero wouldn't be too far away.
But the R to R here doesn't even make sense, man. I don't know. Look, when I'm looking at your chart here, and let's flip over to bits.
Put that at 0.
While you're
it's a brutal looking chart though. That's funny.
Oh,
that's what we want, right? Something like that.
Disgusting. But I would, my first take would be exactly the area that you pointed out at the low. So let me flip over to bits real quick here and let's see what he's got going on here, because he's looking at the higher term time frame for sure.
Yeah, I'm trying to do some wizardry here. See if we can.
Do you have the 10-year candle on Circle we can look at, Bits?
I got the 10-year candle, so we can. Oh man, no! Look, it looks brutal, but the conditions for this thing to save itself, it needs to get above that last month low before the end of the month. This could be setting up here to be a reversal on the weekly, but it's going to have to act fast. I mean, it's going to have to really do a lot of work next week, I think, to get itself back up there. But I don't like how this closed. This still tells me that next week when we open, it's still likely to print to the downside. But yeah, that's still not. This is an ugly looking chart, but. Yeah, I don't know. I'm trying to find the positive. I don't like this. I don't like that.
That's gross, eh?
I don't like that.
It's so bad.
I mean, it's just looking very,
So you're saying I'm going to get another shot at the lows and possibly lower.
I mean, let's invert it. Let's see if there's anything. Yeah, this is the only way that it could save this is it needs to start next week. It needs to open up next week heading this way.
Yes.
ASAP. It needs to get a weekly close back over here. It needs to close the month above that low from last month, and then maybe it can save that as a deviation below these lows basically. But this will be your effective range at that point, which makes sense that this is kind of your range here above that structure from when was this from last year. So you're kind of ranging here. Maybe this is the deviation here. Let me uninvert it just so we can look at it correctly. But this could be your deviation, but you're on a the clock is ticking, right? So you're on the timer right now. You got to get back above here. If this is a deviation below this, though, I do think it runs the highs. I do think it runs the highs easily.
Yeah.
But it
No, I
needs to
can see
hurry.
that.
It needs
I
to
can see
hurry.
that.
Yeah.
And in fact, what I'm looking at here on my chart, so obviously very, very different from the two of you guys. And that's me. That's not a chart. Hi, everybody. It's a puppet. Hold on.
Where'd the chart go? There it is.
There it is. All right. So when I'm looking at this, it's already lost the topside structure here. So obviously not good. Not good to close inside
Yeah.
of here and then reject, which also is right around these lows. Right. So we have an inflection point. Essentially the 86, the 86, 95, 87 area is kind of the inflection point for me. And this is where um this is where things are headed towards this low in my opinion on the weekly. If it continues down, this is the make or break, and it's going to line up pretty much with the areas that you guys just showed, I would assume, because that's all the low side structure before the actual lows. You're looking at like $65 to 71 um here, and this is essentially kind of make or break. And I would even take the close on the weekly here. I know it's digging into that candle because of the gaps, but this is not a pretty chart. This is
No.
ugly as freaking hell, man. This is ugly.
Do they have earnings coming out at some stage soon?
They have earnings coming out. They just came off earnings. They got earnings coming out in August. It's going to be out in August.
Yeah,
so.
August. Yeah.
Yeah. The lower
There is a gap down there on the daily as well, Landy, between
Yeah.
63 and 72 ish. Kind of where
Yep.
you've highlighted right around there.
Yep.
Yeah. So one of the things that I want to point out here is I'm gonna throw down a reference here for my lower second, so I know where it is. Lower seconds for anybody looking at John Bollinger's stuff. Typically, they're going to be either a reversal point or a continuation, right? So if it comes down to the lower second, it would either reverse off of that area or around it. If it does not reverse off of that area, it's going to get continuation down. In this case, it would be a continuation down to test the lows and lower, in my personal opinion, because there's only $2.50 gap between the lower second on the weekly and that line that I just threw down. So let's look at this daily. Yeah. So this gap perfectly off of this low between 65 and 71.33. If we look at the confluence here on my bands, look at this. Smack on the lower second, top side of that gap.
Yeah.
Boom. Right there. Over to the gap. And this was perfectly off the weekly, off of that weekly close open. Perfectly tagged. Stalled at the highs. Open lower. Shot through it. Tried to use it as support. It sucked. It hit some of these highs over here. And then tried to use the zone, lost it, rejected it. This tells me it's coming down to 71 to 65 and filling that gap for sure, man. If this is continuation too.
Yeah.
It looks like it, eh?
Yeah, unless there's some kind of news or something that pops it back up, like at the beginning of the week, it's probably heading down there to fill.
Yeah, so I'm curious. I saw that the ash had thrown up here a little bit more. Now, one of the things that I did notice coming into this area and what bulls would want to see, if you are bullish on picking it up in these areas, what you would want to see is a higher volume candle than on the way down into that area, into that zone that Ash has highlighted for the gap. And you'd want to see higher volume coming in there. And of course, if you see red volume, that's not going to be a good sign. If you see some green buy volume coming in there, good chance for a bounce, maybe fill the zone out and then try to reverse it off of that area. But This is ugly as hell.
Mm-hmm.
Yeah, I'm just trying to think of like, so the way that this is looking to me right now, and when we play our three waves, we look for a corrective wave up, right?
Yeah.
And if I was to do this, this is that. Funnily enough, this is actually how charts always look in Australia. I have to invert them to get to the way you guys look at them. It's just how it works.
Yeah.
Is that we would actually, by the rules that I tend to follow at the moment, we would actually call this a reset. And it's not confirmed yet, but you would then actually be looking for
Breakout
Essentially,
higher,
this is a
baby.
whole another three legs, yeah.
Yeah.
Which actually might take us to where's zero? No, I'm joking. I'm not saying that's what's going to happen, because if it does stall here and start to set a bottom, then
put a
it might
channel on
be
it though. Put a channel on it. Those upper targets align. Grab the just grab those highs.
Which one you want?
Put a big channel on it. Here, I'll throw it on mine really quickly. But dude, it's looking.
You want this one?
Hold on. Let me go back to your thing.
I mean, we essentially double topped off of earnings, off of that surprise revenue miss. Or no, that was not a revenue miss. It was a revenue miss. It was a revenue
that
miss
one.
of 2.88%.
Yeah, there you go.
Yeah, that would be, because that would literally give you, say, this, and then move up, say maybe back under this node, and then perhaps another move up, and then into. I mean, that's actually not. That's not exactly glue eating a TA there. That's actually pretty disgusting. But that's if it can't protect this range with strength, this bounce is almost certainly going to be a lower high.
And it's such a weak low, and all the selling came off of that initial move up, and then essentially the first high. The bulk of the selling came in, and then right after earnings, a lot of people went in to go and buy those highs, and sellers dumped on them and have been bleeding it out ever since. So, and because that's such a weak low, you look at that low and then the gap up before volume hit, I could see that low getting sliced right through if that gap doesn't get filled and then it reverses off of it. Just looking at what you're putting up here, looking at your volume, looking at your oscillator, that's such a piss poor low. If it held up at the gap, though, you could see there could be a case being made for a nice gap fill and then try to build structure back to the upside and then hit the top of your channel again, right?
Yep.
And then we would need to see some volume off of that. That would get your oscillator turned back up, and that would be the preferable route for bulls. This is basically a warning. So invalidation of a move further down is got to be above that last high. It's the last higher high of this move down, this impulsive move down. So essentially, invalidation of the thesis to move to the lows and lower for me. I mean, minimum the gap fill, but then the lows are well in play. Would be a close above 140. So they would literally have to reverse it back here right off that. Yep, exactly.
Yeah, like I'd want to see that, and I'd be mostly looking for, do we get something like this?
Yes.
The green boy show up somewhere around here or here. If that doesn't show up though, I'd pull one out for the circle homies, I think.
Oh man, this is ugly.
Yeah, it's a rough looking chart.
Well,
you can hope that gap fill holds is about it. Or you have some reason to gap up early next week and flip it around sooner than later. But other than that, man, it's rough.
This chat. I'm not sure if. So somebody's asking thoughts on a surprise Fed pivot for next week because the war is ending. I don't know what you mean by a surprise Fed pivot. I think the consensus right now is they hold. I don't see them moving into cut, mainly because I'm gonna show this real quick. You guys might find this interesting. I don't know. It is a little bit more on the macro side of things, but but here's something that was interesting from this week. This is going to blind you. I'm sorry. I wish I could make this a dark mode chart.
I'm
I know
squinting. Go ahead.
All right, everybody, cover your eyes. Cover your
All right,
eyes. This is going to be
I'm
brutal.
ready.
Oh, it didn't. It actually. Now we go. I have to click on mine.
Oh,
right.
God. Oh, wow.
Oh, Jesus. Oh my God. Ryan must be loving.
Landy.
You need
You know
a
there's a trick
browser.
there, right?
There's a browser plugin that'll fix this, man.
Oh, there's got to be. This is awful.
Dude, I've got it, but it makes the other sides bright. So like it's dark in the middle, but the other sides are bright. So you kind of lose. It's a lose-lose.
This is awful. I hate it. I hate every bit of this. But let's go ahead and did I do this right? Okay, let's do this.
What's your filters that you got set on there?
I don't know, but I need to hold on. I got to put this. I have a cigar lit right now, so give me a second. Let me put this down real quick.
Yeah,
All right.
don't put on your testicles.
All right. Well, I'm being burned in the face by this freaking light mode. But one of the key things that I wanted to point out here is CPI right here. Right. We hit the forecast, right? We went up 0.4% to 4.2%. This is a hot read on CPI. Everybody all over the place is making a big deal about this. But what they're not making a big deal about, and what they should be making a big deal about, are these two numbers right here: core CPI month over month and core CPI year over year. The reason that you see the hot read on CPI year over year and the uptick, which actually was not that much, we hit the 0.5% projection, but oil prices are very volatile, and in the near term, they're making prices rise all over the place, all over every supply chain, right? And what we're not seeing is we haven't seen as much follow through to the core metrics that the Fed measures. So this 4.2% does not matter as much as the core month over month, which actually did not hit and in fact came down 0.2% month over month for core CPI. Why? Because oil's been volatile the entire time, lagging metrics. Fed has to look for bleed through. They don't factor in the oil volatility here. So if oil continues down, we need to see this stay sticky and not grow too much, right? Year over year, 2.9%. And we need to see core CPI month over month continue to tick down a little bit or stay steady. And then that would give the Fed the ability later on, considering the job growth, to cut. Now, typically, when you have growing jobs, they don't like to cut because growing jobs contributes to inflation and wage growth. They consider inflation. This administration and Warsh view it differently. They want job growth. They want wage growth. They will take the inflation from something like that and they will try their best to stomp it out on the other side. And how do they stomp it out on the other side? Well, you do that with thank God I couldn't stand anymore. I had to switch back. You do that on the other side with nice sell-offs in oil and the oil markets.
Yeah.
So if we see this starting to break down towards the 76 to 80 area down here, which I'm not totally confident in next week, we have to be aware that we don't pivot off of the lower second here at like $82 and head right back up to 90 to 95. But reality is, if we do start breaking into the low 80s and mid 70s and oil prices stay there, you'll see CPI begin to come back down. And then it'll take a little while for core metrics to start to cool down as well for what the Fed is reading. Then they can cut. I do not see that happening this next meeting, next month, the month after, probably not until late in the year. Maybe they try to push for a cut before midterms, but realistically, I don't think that they'd have a real metrics or data in to cut until much later this year. So that's my soapbox for that. But yeah. Well, guys, I really have nowhere to be. It's a Friday night. I'm smoking a cigar over here. Is there anything else that you guys wanted to like touch on? Anything that you're looking at? Anything that you're tracking coming into next week, or you kind of got most of your thoughts out on some of this stuff in markets?
Nah, that's about most of what I'm looking at mainly. Yeah, other than just watching to see if we get some altcoin pops over the weekend for some of the micro caps and stuff. That's pretty much it, man. I'm just kind of chilling. Majors still look pretty weak. Not really seeing anything super attractive. XRP was kind of following, might be following potentially what BTC is doing, but I think it's waiting for BTC to actually break out so it can follow. Sol was kind of doing something similar, but Sol fell far from its range there, even though it's got this wick down here. But that probably covers it, man. I think that's good for the flow of the show today. Is kind of sticking to what we covered.
Yeah, well, I appreciate you guys coming on, and I wanted to show Ash's chart here real quick again. What is this that you were looking at? Is this this Bitcoin?
This is stuff that I mean, me and Bits have talked about this. Well, I think me and Bits have been talking about this for years, to be honest.
Yep.
This is a Velo data chart.
Mm-hmm.
The top is the daily price action. The middle one is aggregated open interest, and the bottom one is aggregated spot vol. And when we talk about spot vol, now this doesn't take into consideration ETFs. It does cover Binance, Coinbase, Bybit, and OKX for your aggregated spot vol. And the thing that, again, I think me and Bits were talking about it like here, I think, because when we started to draw these things, we were talking about like when people were only starting to maybe catch on that the cycle was heavily perpetual driven, although that started to become the nomenclature. Like after we dropped $60,000, everyone was then talking about it, which was fun. But what we've been talking about was we'd actually seen a continual spot vol decline for years, and it's so far still hasn't given us any kind of high or low on the spot vol chart. So what we're looking at here is open interest shooting up through the cycle, and whilst there was some good upticks here in spot volume, it just never really continued, right? And this is why, and again, this is not including ETF, so this is a subset of data. But what I would love to see is like give us a little uptick in spot vol like that as we sort of start to see open interest do that, and as we start to see price action do that. So we have some confluence with OI, price, and spot vol to give us like a tick, and a tick to help us understand what's really happening under the covers, because it just hasn't, like every time there's a little move up, it's dumped down, a little up, dumped down. So it's by no means like the one thing you should be looking at, but it's been very telling for a long time what was going on. And it's something that realistically, as if we're long-term bullish on Bitcoin, which I suspect we all are, we want to see this spot volume come along, because that's going to show a level of interest that normally, spot holders tend to be more of a longer hold type of mindset, as opposed to a perpetual driven maneuver or move, which generally doesn't necessarily speak to that. So it's just a tiny little snapshot that we look at on and off on occasion, and it's something that I find interesting. So if you haven't seen that, Velo Data, that's a free account. It doesn't cost you anything. I found it from, if anyone knows Credible Crypto, I haven't seen that dude around on the timeline for a long time, but this is where I found this initially off watching one of his streams 2 or 3 years back, and it's something that I routinely peek on occasion. So
yeah, Credible Crypto has been around for quite some time. Some people might know him as the Elliott Wave guy, right?
yeah.
He's really good. He's primarily been just kind of checking in Bitcoin, CRV, stuff like that. Um, one of the big things that so I'm going to show a little bit of this. I don't think I'm logged in, so you have to forgive me here as I switch over. But I'm not logged into this. But we actually have metrics. So because those are incomplete metrics, what they're telling you, by the way, there is that spot volume has been weak in the Asian exchanges for the crypto native exchanges, right? Because most of the volume on spot in the United States, for instance, is being run through in primarily Coinbase and the custody, right? And OTC desks and stuff like that. So one of the biggest there's a few different ways that you can kind of marry this picture together. Crypto Quant, you can get a free account and you can come in here and you can take a look at a few different things. So you can look at, minor reserves for coins. If it actually updates, I think this is not logged in. So it's going to show that it's not going back in history, but it's showing, 1.8 million Bitcoin of miner wallets, right? You can look at exchange flows for coins for Bitcoin, exchange reserves. You can check on that. It should be somewhere around 2.7 mil. So yeah, and then you can see that the bigger drawdown the entire way through. So one of the keys to understand with spot volume, when you see spot volume headed up, what you're seeing is a lot of movement of coins in terms of accumulation, in terms of that volume being accumulated up on Velo, I believe, if I remember their metrics correctly. But what have we had the entire time? This has been a sell off the entire time, a drawdown from all these exchanges in terms of their reserves, and this is just the aggregate in and out. So this isn't Binance's. This is all the different exchanges, right? All aggregated. This is the flows to exchanges and Bitcoin that is sitting on the exchanges as it stands right now. And that's your deposits. You can look at the inflows and outflows. Obviously, if it's on exchanges, what are people typically doing? They're levering up. Therefore, you're getting that open interest read that you're getting. Um, the the big thing when it comes to not supply, I'm looking for the correct one, not minor flows. Was it flow indicator? It's not going to be flow indicator. I'm looking for the cohorts because I've mentioned this before on stages, but I didn't show, or I haven't shown this on stream, I don't think, in a very, very long time. I forgot which tab it's under, believe it or not, because I came completely prepared to show this, not just thought of it right now. It's the coin age, essentially, the UTXO age bands. And I believe this might be the one. Nope, that's not the one. I'm looking for spent output volume, realized cap, UTXO value bands.
Is
Yeah,
this similar to like long-term versus short-term sort of holder types
yeah,
of
it's like
ratios, or?
your SOPR metrics. I just forgot where it was, to be honest with you, because I haven't logged in here since the other day. So when I thought to look at, the 2 to 3 year holders, the 5 to 7 years, and the 9 to 10 year or whatever, however they break it out. And now I'm actually forgetting. Is it going to
Why
be?
don't you just search it? Yeah, just search it.
I don't know if it's actually SOPR though. If I'm looking for SOPR, um, yeah, this isn't, no, because it's UTXO age. So let's actually just search it up. Yeah, that's not it. But essentially, what we're seeing is who's actually accumulating. Um, realized price. This might be under market indicator. I'm looking for a very specific indicator here. This might be it. Come on, populate. For some reason, this has been slow as hell. Yeah, this is the one. So it's a realized price for the UTXO age. So essentially, your transaction age. And one of the key things that I'm watching here as it relates to spot, because this is moving on the network, is you've got a whole mess of lines here, but essentially there is a key up here, and what we've seen or we've observed since the bigger drop is we've had this green line start to move up, and we've had the lighter purple here move up. So lighter purple is 5 to 7 year, and the green, which is the downward green triangle here, is the 2 to 3 year. So 2 to 3 year puts us right from the bear market lows through to now. The 5 to 7 years last cycle. And what you see is they've been picking up since the rejection at 98 on the way down to 60. And in this zone, both the 2 to 3 year and the 5 to 7 year have been picking up. Who's been selling into them? Well, it's actually been I'm sorry. So let me actually get that 5 to 7 year picking up. The 2 to 3 years picking up. Who's selling into them? It's the 3 to 5 year. Right? So 2 to 3 year picking up, 5 to 7 year, 3 to 5 year is selling into it. So essentially, you got a lot of people that got to enjoy the move up that have been selling into the move on the way down. And then you've got some near-term holders that kind of came in for the bull run that are now picking back up. And then you've got some more longer-term holders that are picking up. You've got short-term holders getting wrecked. You've got the golden here is 6 to 12 months. They bought the highs here and they're continuing to buy on the way down with a little bit of capitulation on this last move down. But this is all on chain. One of the big things is there's about 6.5 million Bitcoin that actually are actively traded. And we have, in terms of open interest, which I know you guys like to use Velo for open interest. I like to use, if I'm going to use, because open interest is built into all the different quant platforms, but I usually show Coinalyze here for open interest.
Yep.
Because it's just a good metric. It doesn't give you what Velo gives you with the spot, right? But it can give you a good view of what's going on in the perps and who's selling. So if you want to take Velo, I would also take some of the on-chain metrics and I would marry that with one more. Like I like OI here. We haven't quite, I still think, on the low, we're still got higher lows on open interest here. I think that spot needs to come in and sell them out and wipe them out and bring things to, the upper 50s to mid 50s at minimum, me personally from here. But the other big one that I suggest that people pay attention to, and I will share this, is so value. So value assets /ETF. If you just go there and you look for the ETFs and Bitcoin spot, this is going to give you a very good idea because look, when the ETFs are green, the AP has to go and pick up spot, right? For those creation units. When you see a big sell-off or big sell-off, so you have all the different spot ETFs. This is a big portion of the market. It's 1.2 million Bitcoin right now, or 1.25 million Bitcoin, and that's all transacted as spot Bitcoin, and it's redemption in kind from the AP, meaning that when they sell, that's downside pressure from the spot side. And if we see that open interest is ticking up and we're getting spot selling into that, at some point, if it continues, it will overwhelm those perp traders and they're going to get liquidated, right? So one of the things that you can watch here is the total Bitcoin spot ETF net flow. So this is either going to be green days or red days. And you see that we've got, only 2 out of the last, since, early last month of trading days that were actually inflow days. So that means that the ETFs have been doing a ton of redemptions. Those authorized participants are redeeming a bunch of Bitcoin. You get the daily history over here for the total cohort of all the spot ETFs for Bitcoin. And it tells you basically the actual total daily net inflow. So negative, 19 million for all of them, 213 mil, so on and so forth. one of the things that I was trying to describe to Crank the other day is that you need to pay attention, because if you see open interest rising, it's in price, for relative open interest to where price was in prior zones. For instance, if we see that we continue to have open interest here on Bitcoin, off of the initial $60,000 low area, even if that wasn't the exact price, right? We had 19.3 billion in aggregated open interest, and on the low here we had about 20. So we had about a billion difference, but we also made a lower low. So we have a divergence in open interest. We have higher lows on open interest with lower lows on price action, right? So if we continue to see spot sell side pressure, so I know I'm hopping around a lot, but I want to go back to something here, and it's called the Coinbase Premium Index. So
I have seen this. Yeah, I've seen that one.
yeah, so this, and there's premium index or premium gap. If we see that spot is not leading the way to the upside and perps are leading the way to the upside in a bear
Are
market,
you sharing that one? That one at the moment, Landy? I'm still
I'm
think
going,
I'm looking at Quantize.
I'm getting up.
Oh, there we go.
So
Yep.
this is the Coinbase Premium Index. So this is the price difference between Coinbase Pro USD pair and the Binance USDT pair, right? So it's taken the biggest spot exchange versus the biggest perp exchange. And if you see, at the highs here, I'd like to zoom in. We had open interest continuing up on this entire move up. We saw that right around the price point of, we were pulling a premium, meaning spot was leading the way at about $74,000, which 74 to 76 was a big area to me. And it continued to lead the way until around 78. And then as Bitcoin continued to try to push up, spot sellers came in around the monthly 80,000 to 82 and a half, around the around that big monthly overhead resistance. And then spot sellers sold it all the way down. Oops, I just zoomed in by accident. The reason why I bring this up is because if you were going to compare, when did spot sellers flip? When did we lose basically spot leading the way for price action movement? We lost it here on the 25th of April. So if we go back to the areas here on the around the 25th of April, we had the move down, but from the 25th of April on, I'm going to go over here to look at open interest. From the 25th of April on, we had, so where's the 25th? All right, so the 25th of April on, we set a low on open interest, right? And then it climbed back up towards around 29 billion, or around 28 billion, right? As open interest was climbing and price continued up, spot sellers were exiting. And we saw that we lost the premium and it started to trend down at that same time, right around that 25th and on until now. We've seen that spot has been leading the way to the downside. We did get a nice buyback on spot right off of the lows, and now it's just kind of bouncing around for premium. So my point being is that spot was selling into the perps that were driving price higher. So when price was being driven higher, we got more and more open interest, a couple billion more. In fact, if I go back over to this screen, we had open interest was what did we get? So open interest went from it went up about $5 billion off of that low, while spot sold into that $5 billion. And then we can compare. We could say, well, on the 28th, moving through to the beginning of the month, because this was through to the first half of the month, up through the 7th of May, 6th to 7th of May. Now let's go over and check so value. And we can look here that on the 7th is when we started to get more heavy spot selling out of the ETFs, right? And we started to get redemptions. So who moved first though? Because we lost the spot premium over Binance, right? And spot sellers were selling in. That's because miners were moving and they sent flow to exchanges, and then OGs were moving and sent flow to exchanges. And then when we had the gap, we had the 5th into the 6th and 7th, then began to flip for the ETFs, and they became sellers too. And that was as we were rising into the highs. Spot then began to sell very heavily into those highs. And when you look at where the highs came in, the date of those highs, this is super nerdy. I'm so sorry, everybody, but I have to nerd out for a minute. That's when we saw the actual spike through to the 11th. We saw the spike here at those highs, 82.8, right at the monthly, and then it tried to hang out. And the entire time, spot sellers from Coinbase and then the ETFs all rolled out on the 7th. And the 7th is where the high came in. And then we started to see open interest come down at the same time. But why did open interest come down? Because we hit a monthly. You saw the spot selling coming in pretty heavy. And then we had spot continue to drive it down to a structure change through the 11th. And then they've been selling ever since, which then caused all kinds of liquidations from the point on in for the daily. We saw liquidations really begin to hit on the 12th and 13th as the spot selling continued to the downside. So the heaviest liquidations, obviously, that started to happen on closes below 72, which was the top side of our current, little range here, 70 to 72. So it's a long way of saying that there is a lot of complexity here when evaluating perps versus spot. One of the first places that I always look is where is the spot premium. So for instance, right now, if I'm looking at this coming into the low, we saw spot start to pick up on the way down. And then really we saw a big move up in spot. We didn't overtake a perp lead in the markets. Perps are still leading right now, which means that until spot starts to lead, I'm not confident in a move. So if I see spot premium leading back to the downside and we are continuing up, we're probably going to find big overhead resistance, especially above, the 65 levels, right? If we see spot premium continuing to head down, then you can go and you can look on chain at the miners. You can look at the flows to the crypto native exchanges, and then you can look at the spot ETF. So they turn in red, then they're doing redemptions. So it is a puzzle that you have to put together yourself, but it's a little bit of insight into my methodology because I maintain that spot leads the way, perps follow, spot is early, and then perps typically, and it's all in an effort to take that perp liquidity, in my opinion. I know that there's many that disagree with me. That's just my view, personally.
Want to absorb all that. I was just trying to ask, when you were talking about when the spot started to sell off,
Yeah, let me go and look.
did you say, sorry, yeah, because I was trying to get the other things up that you're open on. So I'm looking at that's not the right chart to look at. So the peak came in around the 10th of May, but did you say they started to sell off around, was it the 7th of April? Was that what?
The 27th of April.
27th of April, okay.
Yeah.
Okay, so yeah, it's getting into that.
Yeah, around between 76 and 78 is when spot sellers started to come in. So they were early, front running, and they didn't really start aggressively selling until right as we were hitting the highs. Then they started to aggressively sell right at that 82, right between 80 and that 82.8 spot high.
Yeah.
So, and then of course, they were behind. We had the little bit of a structure break locally, and then you saw spot premium just go wild to the downside. That that actually started, in through the 7th into the 8th, and then really aggressively all the way through to it really was exponentially aggressive through to the 27th. So basically they went from a full 30 days, essentially from the 27th to the 27th, from April to
Mhm.
May. And they didn't actually aggressively reclaim or get a bounce in spot premium until we got essentially in and around 65 and under is when it started to bounce. Right around those lows is when spot came in. Meanwhile, open interest was coming down aggressively. So spot set the low and then open interest started to build again, but open interest came in and set a higher low. So we have a divergence. Prices on lower low structure, open interest is on higher low. Thank you, Bits. I appreciate you coming and hanging out, brother. Sorry I went on a
Thanks,
tangent
Bits.
here at the end.
No, that's right. It
Shout
technically is
out to
my fault
Bits.
because I was like, "Hey, let's look at Velo."
No, it's all good, man. You guys nerd out. I do got to jump though. I'm supposed to be doing a family movie night thing tonight. So,
Well,
but look, I'm gonna let Ash digest all of this, and then he's gonna feed it to me in a much more
simple way.
concise and simple way. Yeah, he's
Yeah.
gonna code it for me on an indicator somewhere. It's gonna be
Oh
all
my
good.
Well,
God.
Bits, I appreciate you coming to hang out and taking the time. I really do.
No, dude, thanks for the invite. These are fun, man. Appreciate it for sure. And Ash, it's always good to share a stage with you, man. It's always good to go back and forth. So, no, you guys get your nerd on,
And you,
man.
brother.
I'm gonna jump. I'm gonna go hang out with the fam a little bit. But again, thanks for the invite, and thanks to everyone that was hanging out, asking questions, leaving comments, all that good stuff. Make sure you guys are reposting and sharing this stuff. By the way, like I don't think we stress that enough. That it's a very simple way that you guys can support us and just demonstrate that what Landy's doing here is valuable and that you guys want to see more of that content. So make sure you're liking it, reposting it, sharing it, all that good stuff. But yeah, Landy, with that, I'm out, brother. Thanks again. Appreciate you, man.
Thanks, brother. Take care. Have
Thanks,
a great
Bits.
weekend. Well, Ash, I got to tell you that one of the big things that I know, a lot of times, a lot of people have the confluence of open interest rising and turning, right? It comes down aggressively, liquidations, and then it starts building back up as we head into a bull market, right?
Hmm.
And with and one of the things that that we often will see is that um traders, specifically perps traders, get very, very into understanding how perps open interest moves price, but they ignore that spot is the settlement, right? So underlying all of your perps and futures contracts, spot is what is getting transferred whenever you buy and sell. So all of that paper on top of it still has that limited number of Bitcoin on that exchange. Um, and all it takes is for a miner wallets hold 1.8 million Bitcoin. They regularly transfer about 100,000 Bitcoin a week to and from exchanges. By the way, they trade as well and they lever up and down and they blow themselves up as well. But you have a situation where now we have a completely different market that is spot driven with the ETFs, and it's not as big as the crypto native exchanges. So you got a 2.7 mil on crypto native exchanges, but you can get OGs transferring in and out at any point very easily.
Hmm.
And then of course you've got the 1.25 mil that is in the ETFs. Well, when the ETFs start selling off and you see open interest rising, you're running into spot side sales and they sell in clips. So if you get a 1,000 to 5,000 clip that's sold OTC and they start bleeding that out into your perps trading to the upside, that rising open interest, you're giving them the exit for that spot, right? They got 10,000 coins to move. Then they're going to, they do that deal Like the 1.2 billion. You remember the other day, like 2 weeks ago, when everybody was all over the timeline, Ash, talking about the 1.2 mil OTC deal for IBIT shares?
Yes.
Like a big
Yes.
player got margin called or something. Something happened, right? Well, what they did is they bled that out. They didn't just dump it onto the market. They bled that out, and they bled that out pretty perfectly. It was right at the damn highs, right after we hit the highs, right? And started to break back towards
Perfectly
78.
executed.
Yeah. And then they just kept their foot on the gas to the downside, right? Just by continually, every time that we saw a bump in open interest, that was getting wiped out by the spot side selling, which then was transferring, transferring, in this case, settled USDT contracts for that money, right? Because all they're doing is putting Bitcoin in, taking USDT out at that point through the sell side, and just bleeding that those levered bets down all the way, which causes all those liquidations into the lows before things turned around and got picked up by spot buyers. And then we saw that that open interest started to turn around and make that nice rounded bottom off the lows. Interestingly enough, we do have a premium on funding for long pay short right now, but it's very low.
Mhm.
So I'm curious, because you brought your chart back up here on some lower term timeframes. Well, I have you because one, for anybody that doesn't know, I might be experienced, but I am obsessed with looking at the stuff that really intelligent people put out there who know their shit in this game. I want to see what they think, because I am not the end all be all of where price action goes. So I noticed that you had you have a little bit drawn out here on some lower term time frames
Mhm.
for this
Mhm.
channel. And I guess either a channel run to the top side or a breakdown from the channel is kind of what you're looking for from here.
Well, look, what I thought I'd do, because like I reckon this will probably be about the last thing I can show today. I reckon I've got about 10 minutes left in me, and then I'm going to run off
Sure.
to the gym. But what I thought, because we spent so much time talking about OI, this is sort of like a practical example of what I use, the method that I learned. And I'm very upfront. I learned the stuff the way that I trade from Annie at Trade Travel Chill. All right, so
Okay. Yep.
it's similar to like market maker methods. Anything if you've seen market maker method, it's just let's play on that. So it's but what I'm trying to show here is there's a lot going on, and I might, there's not a whole lot more I can do here, but I will now look, let's see how we go. Okay, so price action, obviously, volume in the middle, and then a open interest indicator down the bottom here. Now, if you understand the way that I approach the I guess the chart is, we look for Monday, Tuesday. This here, where's my look? These days here are generally considered day trades or short-term holds. Okay, because the week hasn't necessarily set its direction yet. We start to look for direction form around Tuesday. Okay, so around here, Tuesday, Wednesday. It was Tuesday, Wednesday this week. So if you remove that, and if I go here, what I want to show you is if we just go to, say, this here, what we're looking for is a couple of things. One, we're looking for a bottoming formation or a topping formation in levels, and I'm not going to go through all that stuff right now, but what you can see here is what I want to show you is what we would call a classical W formation at the bottom, okay? And what this might actually be easier when I first do is I might just turn the other indicators off so there's a little bit less noise, and I will even delete the channel. So without any indicators at all, you can sort of see what they've done is they've set a bottom, moved away, come back down, retested that bottom, and took the people who had tight stop losses, right?
Mm-hmm.
They formed that with a nice big hammer candle. And then what did you see after that? You started to see volume come in, right? And we've got 3 large volume spikes throughout the week. This is a 15 minutes, so it'll look different on different time frames. But
Yeah.
for this here, it's a little bit clearer on the 15 minute to me. Now, once we saw this, now this is open interest.
Mm-hmm.
If you notice here, we started to see, after open interest had been dying away, we started to see it show some signs of life. Okay? That didn't tell you enough. This here, along with this here, so effectively a higher low on the open interest and a high volume move here, this is information you can use on the chart to give you an indication of which way the market maker intends to take price action that week. Okay?
Yep.
Because you see open interest increasing. I'm going to do all this out. I've been through this many times, but it's always fun for you to go over. When you see a trend in open interest, in this case, increasing, okay? So you got, that's not going to work. How do I type? So you got open interest increasing, okay? Don't know why I pressed that. You have, again, we talked about this morning, or an hour or so ago, about how the volume is coming in. Are you seeing higher buy vol than sell vol? We have that here. Tick, tick, tick. We have open interest coming in with volume increasing, and we see price action beginning to form a trend to the upside. Okay. Now, this is a short time frame. This doesn't mean that it's going to go up forever. It's just saying the trend for the week. So the 15-minute and the 1 hour is generally what I'll play for a weekly swing. Okay. So you can see three confluence indicators: open interest rising, buy volume dominating, price action beginning to show trends of to the upside. That is giving you all signals that the intention of the market maker this week is to take you up. Okay. It doesn't always happen the exact same way, the exact same time, but these are rules that you can use to help people understand. Like, if you think you want to get into a trade that week, start to look for the obvious signs of the trend direction. Okay, when you start to see trends of higher buy vol come in, well, unless you're
Uh-oh.
Are we back? I just saw connection lost.
There you go. You're back.
When you start to see this sort of stuff, it's telling you a story, okay? And the only time that I start to get interested about, say, taking an inverse position, unless it's like, hey, I'm trying to take a swing short on a bearish engulfing, but probably understanding that I'm probably shorting a retracement. I'm not shorting a primary trend, right?
Yeah.
Unless you're doing stuff like that, you have the concept that you're playing long, right? But it's like, well, how long do I know how long I should be staying long for if I'm trying to do a weekly swing? Well, this is where open interest can help you get an indication before anything else. Okay, it doesn't always work this way, and it's not always as pretty. But if people read a tweet I put out yesterday, I said, I'm seeing positions being closed against the trend. Okay, and I think you saw that tweet. And what I was pointing to is, when you see positions being closed against the trend, the way that I've been trained to understand that is profit taking before the weekly close comes in, before the weekend session. Now, this spike here, like I was looking for 65K this week. Now, you can see my markers where I've got a wave one, and I'm going to do this now. I'm going to put my indicators back on. I'm just going to turn all my EMAs off just so we can see. And I'll turn my track line off as well, just so I've got basically raw price action just with the PVSRAs. So there's your volume move, giving you a wave one impulse, a deep retracement, a wave two impulse, a retracement, a wave three impulse. And now you can see what I'm looking at here is I'm looking at this being some kind of local topping formation before a retracement begins. Okay. And when you look at where open interest started to drop off, it wasn't graceful, because these are liquidations, like these big blocks there, these are liquidation
they're all
events, right? So this is
liquidations,
them. Yeah. But what you're seeing is now, instead of seeing from here, instead of seeing price continuing to rise and open interest still like it's going the other direction, that there is usually a signal to me that the market maker is beginning to build the opposite side of the trade in lieu of trading to the downside for however long they decide to do that. Okay. And they start to form what, again, like we saw here, they start to look to form topping formations or peak formations before that happens. Now, sometimes they're really easy to pick. Sometimes they're not. Like this week, this is kind of gross. I've got a loose M formation here, right?
Yes. Yeah.
But it's by no means clean. You know,
Yeah.
they could just do like what I'm looking for, and this is why you can see I've drawn this, is if this is the peak formation and they did take liquidity here, they didn't take everything, so there's more liquidity built up here. But if we ignore that for now, they've spiked up, they've pulled away, otherwise still not really doing much. What I'm looking for is to them shoot up to get the last of the late longs to think, oh no, we are going up through the weekend. Now they might do that. I'm just saying this is the trade concept.
Yeah.
Is they're actually going to fall short somewhere up here, or maybe they decide to take it like this. They decide to do a little liquidity sweep like this.
Yeah. Sweep
right?
the high. Yeah.
Yep, do that and then bring it down for a corrective move. And when you do that, if you don't need to look at the liquidity sheets, you know there's liquidity there. You know there's liquidity there. You know there's liquidity there. This stuff, like if you look at a chart and you can see this sort of price action, well, they're protecting these ranges, right? And you got to understand when they start to protect, that's because they don't want to take that liquidity yet. Doesn't mean they aren't going to take it. It just means yet. They could leave it here for 2 weeks for all we know, but they're doing that to build up the fuel for what I still believe will be eventual downturn to take us to lower prices, right? And that formation, some weeks it plays out clean, some weeks it plays out gross, some weeks you just get sideways, right? It's not a given. But when you have this sort of information and this sort of tooling, it can really help you build that idea of what you're really looking at, right?
Yeah.
So there's no need to rush into a position. If you can take a few sample points of what you're looking at in the data, you have the information usually available to you to give you a bit of confidence in which way the price is going to go that week. And it's up to you to sort of understand what you're seeing, right? Ignoring the timeline, ignoring the perma bulls, the perma bears, and just look at what's happening in front of you. And the next key point, this is sort of the trickiest one, is to find the right time frame that is going to play out on, right? Because I'm not going to tell people what time frame to trade on, but for me, 15-minute, 1 hour is generally what I'll look for a weekly swing. But I thought that might be useful to add some icing to that open interesting, Landy, to sort of help people understand what that can look like on a chart.
And it's beautifully said, because essentially what happened this week was all the late shorts got taken out of position here. And there's and what Ash is describing, for some there's some newer people in the audience. What Ash is describing here is essentially that with what he's put here is like it's they're either going to go up and take the rest of the open interest and a lower high basis or a higher high sweep, and they can drive it up further to take the rest of that OY on the short side out from those late shorts. But usually the weekends, some of the late shorts they're still getting a little dicey for them. Even though they're not really sitting in a bunch of, like, funding isn't really paying them too much in this area. So it's a matter of watching what price does next in relation to that open interest, right? So one of the key things I think that you said is I would like to see personally, I would like to see the bulls continue with the placing the bets. I want to see funding tick up. I want to see more open interest come on the board on the way back down in some of those key levels that you have pointed out for a correction. And then I would like to see them run it up again, because we'll get a bunch of late shorts entering as it gets back on the low, especially if they've been taken up. They've gotten smacked, like 3 times this week for liquidations.
Yeah.
Comps. So I'd like to see them try to chase and recover, get late again, and then go ahead and then we build up that long interest, drive it a little bit higher, and then dump it out past the lows. That's what I would like to see personally. And we
Hmm.
actually are 100% on the same page with this. Um, I think the biggest factor is that many aren't really, they don't really pay attention to, and I'm not saying you, I'm just saying that many in this market that are trading, they're not paying attention to the dichotomy or the split between East and West, and East being Asian countries. Look, they trade a lot. I know, wild, right? Binance, the biggest freaking perp exchange out there, right? Um, is that there is a battle that is occurring here, right? And that battle is to bleed out coins over time and in the longer term. Larger institutions here in the West in the driver's seat. You've got OGs, traders, and Eastern players that are in all of the crypto native exchanges. So you've got one can influence the other, and it's a game. And in that game, one of the key missing pieces I find that many traders aren't looking at is where is spot going? Spot, and this is how, this is from me, and I, with everything that you said is beautiful because this works when you are trading in perps. Everything that he just showed you, brilliant, because it works for perps. And this was actually Crank's contention the other day. But one of the things that I can tell you from being in traditional markets for a very, very, very long time and making markets is that the underlying asset is the ultimate um, make or break when it comes to, because everything in traditional markets is leveraged, right? You have options, there's all kinds of paper contracts on top of underlying stock, right? So if I make a big move in underlying stock and I can bleed out the open interest for the dollars by utilizing spot position, because I'm utilizing what somebody else has leveraged collateral, and I'm using pristine collateral essentially. And this can go for any type of collateral because you have the collateral versus somebody that's leveraged on their collateral. You don't have a liquidation or stop. They do. So you can push the market around and use them and bleed their positions dry for liquidity. And often what you would say is like in traditional markets, you get hedge funds, for instance. What do? They buy the underlying stock, they run it up, and they take hedge positions on the other side, and then they unwind the underlying position, and then they ride the short down. Um,
Mm-hmm.
you actually see the same thing happen in this market. But now we have a lot because it's a global asset that is split across global exchanges with two very different paper markets that are they're very different in terms of the size, right? You have 2.7 million Bitcoin on exchanges right now. And what's the open interest read right now? The aggregate open interest total? It's somewhere around
Uh, was it like 20 billion?
20 as of right now. It looks like it's about perpetuals 19.5, futures 1.8, so about 21.2 billion. We probably got like 40 billion to 60 billion in open interest on the other side. In so these same games are being played in traditional markets with the, IBIT especially, right? We've got basically top two players, IBIT and Fidelity, and um all it takes is for a big player to do a big redemption, move that underlying spot. And if it cascades there, it's not going to necessarily cascade because when those APs get it, they're not going to just dump it. They bleed it out
Mm.
over time. And they have an ARB that they can do, right? So they're ARBing, and they will utilize the crypto native exchanges and all their contacts and the Coinbase and all that kind of stuff. They utilize that to actually um, arbitrage through the cells to get that liquidity to not really move the markets as much. But then you see what happened from 82.5 to where we are now. All it takes is the catalyst for spot to turn, and then perps will turn with it. So it really does become a chicken and egg. You can look at either one, and you're going to see what the truth is, like what you just showed. Um, I think that for some traders, I think it might benefit to if you were going to add one thing is the spot premium or Coinbase premium. Because if you're already pulling from the major exchanges for open interest, you should know what the premium is. You should know if the spot side is using perps as liquidity or if they're in to the downside or upside, right? So premium down, spot leading to the downside. That means you're going to, and you see that price is moving to the upside. You're going to see that all those perps will eventually get liquidated to the downside and vice versa to the upside. If you see spot premium then coming back up and moving towards the average and then taking premium, you're going to see liquidations like what we saw this week. So two things, same conversation. One is not better than the other. Both influence each other. And I think that if somebody is looking for an edge out there, add Coinbase Premium to your open interest outlook. Don't change anything. Just be aware of it. Ash,
Great
you're a
point.
brilliant man. You're a brilliant man, and I thank you for taking the time to join me today. I don't want to keep you any longer. I know you got things to do. For the audience, if you are not following Ash, you need to be following Ash. One, he's hilarious. Two, he's brilliant. And three, he's got his own indicator suite that he made himself that is awesome. So that's a gentleman's suite. You can find it linked on Ash's bio. And you should be paying attention to what he's putting out there because boy, oh boy. And between you and Bits and all the different traders that Cade has brought on to the Wolf Bitcoin as the crew there, man, I am stupidly impressed. I wish that there was this kind of, I wish that you guys were more, I'm glad that a lot of the fake TA guys have been ridiculed and washed themselves out of this market because it allows the cream to rise to the top. And I think that you're one of the top guys out there. So I really do appreciate you, Ash.
Oh, thank you for the flowers, man. I really appreciate that and echo those sentiments. The crew that Cade and Co have put together, really, small group but a really good group. You know what I mean?
Yes.
And all I can say is again, thanks again, and I really appreciate the opportunity to share my thoughts today, brother.
Yes, sir. I'd love to have you again sometime. You're more than welcome anytime. Anytime you got free time, you can just hit me up. I do this every Friday. But for everybody out there, this is Ash. You can follow him at, I know I have it in here. What's your handle? Dev Engine
Oz.
Dev Engine OZ. The man who has to invert his charts just so they look correct to us. To him, this whole chart's upside down right now.
It is. It's actually really difficult for me to read it this way to you guys. Yeah.
But thanks very much. Definitely go give him a follow. And I'm going to wrap it up right from here with both of us on stream. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. Make sure you're following David Gokhshtein on Monday morning for me. It's actually 12 p.m. Eastern Standard Time, 9 p.m. or 12 p.m. 9 a.m. Pacific Standard Time. I'm a little tired. It's been a long week. All right. Cut me some slack. I see spiders in there talking. Look, follow. I'm going to be on there. I'm probably going to yell and scream like I did today. It's actually kind of fun for me to do so. It's like scream therapy. While David sits there and laughs at me. Of course, I will have the Macro Monday video out after close of day. I'll have the Wednesday video, and then I'll be right back here next week. And who knows what we'll have? Maybe Ash will come back. Maybe Bits will come back. Maybe Nat will come through. Maybe Mr. Spread will come through. I don't know. There's a bunch of other people that I'd love to get on the show too. Maybe a Trader Steve sighting, but he is Canadian, so he's probably going to flake on me. I'm just kidding, Steve. I love you. All right. Have a great night, everybody. We're out.